Good morning, good evening, good night, wherever you're watching this transmission. It is I, Mike Martins, your housing discussion guru. We're here to talk about some big changes in the markets in the last couple of days. Man, in the last couple of hours. Man, interest rate hikes in Canada. New Zealand implementing the foreign buyers tax. Lots going on. I don't even know where to start with this damn thing. People rolling into the comment section. Today is the 25th of October, 2018 for most of the world, and it's still the 24th of October for 2018, where I'm at for another couple of more hours. I want to thank everyone from joining us from Sydney all the way up to all the way down to Auckland, back up to London, down to LA, to New York, to Toronto, and back to Vancouver. This is Trends in the Housing Market, and I am your humble host, Mike Martins, here to give you guys a little bit of a little refresher here on what's going on, guys. So we got a lot of articles open here, so we got to start hitting these hard. Bank of Canada rises interest rates to 1.75%. Guys, that's nowhere near normal interest rate. It's nowhere near where it should be. It should be sitting at around 4.5, 5% is somewhat a bit high, but still manageable when it comes to bonds. Bond markets become more attractive, and you start making money in your bank accounts, where the bank actually pays you to keep money in your bank account. Bank of Canada rises interest rates to 1.75%. Central bank's benchmark rate pushes up borrowing costs for consumers. Well, here's the problem with this, guys, and what I'm feeling about this, and this is kind of a knife to the heart, is businesses, small businesses that actually take loans out are going to actually be in this, mixed into this mess. I honestly think there should be a benchmark rate for small businesses that are proving, or they could prove that they're actually hiring Canadian employees and blah blah blah. You know, people legal to be in Canada, and they're actually hiring them, putting them on payroll. They should get a lower rate, and this could create a government incentive to create more business in Canada. And this would be great. And then this way you have another rate for consumer borrowing, whether it's housing, whether you want to buy a car or something. Then there should be a separate rate across the board to protect the people, so that small businesses don't have to take the brunt of rate hikes when they're, like I said, employing and contributing to especially the private sector. You know what I'm saying? So central bank benchmark pushes up borrowing costs for consumers. This was posted 2 hours ago. The Bank of Canada has raised its benchmark interest rate by a quarter point for the fifth time since last summer, pushing up the cost of borrowing for Canadians. The bank's rate is now set at 1.7%. That's the highest it's been in almost a decade, dating back to December 2008. Remember, guys, historical lows, historical interest rate lows, not good. Creates these bubbles, it becomes more attractive for foreign investors to come in and pop up or buy up existing stock. Known as the target for overnight rates, the benchmark is what Canada's big banks charge each other for short-term loans. It filters down to consumers because it affects the rates the banks offer their customers for things like variable rate mortgages and saving accounts. So Bank of Canada isn't making too much, but the banks, some of the posted rates are right now at 4.55%. So it gives a little bit of middleman work for the banks. Remember, middleman, a banking system or a federal banking system is the banking system basically is the middleman, is what it is in this case here. It filters down to consumers because it affects the rates the banks offer their customers for things like variable rate mortgages and savings accounts. That's really happening. As four of Canada's biggest bank increased their prime rates by a quarter percentage point on Wednesday, which is today. The Royal Bank, TD, BMO, and CIBC have all raised their prime lending rates from 3.7% to 3.95%. Scotiabank is expecting to follow suit soon, but all new prime rates will be in effect as of Thursday morning. Canada's central bank has kept interest rates at record lows for several years to stimulate the economy following by the economic slowdown in 2008, but has since begun to ratchet it higher as the economy gets back on sounder footing. Here's the question, guys, in the comment section. Is Canada's economy becoming more stable? I'd like to know in the comments below. Here's key overnight interest rate. There it is, another little uptick. Bank of Canada's rate should be in 2.5 to 3%, and allowing the banks to make a 2-point spread. It's 2 points off the loan. So that's enough for the banks to make, and then that'll be more than enough for Bank of Canada to take its piece of the pie. Sorry, guys. Lots of pop-ups here. Economists are experiencing a few more rate hikes to come, but the bank hinted on Wednesday that it wants to see how current rates are affecting the economy before proceeding. Let's move on. Economists expect more rate hikes. Candice, a portfolio manager investment firm, Fira Capital, interpreted the bank's statement as clear sign it has strong confidence in the outlook for the economy, which means rate hikes to come. The bank's upbeat tone in the sentiment is not all surprising given the economy is operating near full capacity, and core inflation is hovering around target, while trade tensions have receded substantially following the successful renegotiation of NAFTA, she said. So here it is. Rates going up, guys. Currency investors were certainly a little bit more confident of more rate hikes to come. Within seconds of news coming out, the loonie gained half a cent, just under 77 cents US on Wednesday morning. All this being equal, rate hikes send currency higher because they make it more worth your while to invest in the country. That's exactly what it is. The raising rates need to hedge against inflation, and that it's got to be done. It's something that's mandatorily needs to be done. Historical low rates have pushed these bubbles, whether it's the stock market, whether it's the housing market, whether it is even the auto market, where everybody's buying a house, you know. And everybody's buying a car, so everybody on the block has a new car because of rates being historically low and giving money away is what it is. And then now people having to clean up the mess, but who's here to clean the mess up? It's the working poor, and it's the people that don't involve themselves in this whole mess are the ones that are going to have to pay for it. And that's the sad part. Let's move on. 2. RBC, TD, CIBC, and BMO raise prime rates following Bank of Canada interest rate hike. Again, people. Toronto, the cost of loans linked to big bank prime rates are headed higher to the wake of Bank of Canada's decision to raise its key interest rate target by a 1/4 percentage point. That's just a quarter. What if it was back in the 80s, in the early 80s, 1980 or 81, when they raised interest rates to 16%? The Royal Bank of Canada, Bank of Montreal, CIBC, and TD Canada Trust said they are raising their prime rates by a 1/4 percentage point in the wake of the central bank decision. The big four Canadian banks each raised their prime lending rates to 3.9% from 3.7% effective Thursday. The increase rises the cost of loans with interest rates linked to prime rates such as variable rate mortgages and home equity lines of credit. The Bank of Canada... Well, you got to also take into account the mortgages that are coming up for renewal. They're going to be going up too, and a lot of them are coming up renewal this third quarter. There's ones coming in renewal first quarter of next year and second quarter of next year. Third quarter, you're going to see tons of renewals, and interest rates are going to be moving up. The Bank of Canada raises about a 1/4 percentage point to 1.75%. It was the 5th time since the summer of 2017 that the central bank has raised the trend-setting rate. Again, let's move on. Rate hikes to cost Canadian households $2,500 each per year, but it isn't uncharted territory, says the report. So this is what it's looking like right now when it comes to raising rates. Canadian debt holders, especially millennials, may see their savings and discretionary spending under pressure as the Bank of Canada announced it would be hiking interest rates to 1.75%, according to Environics analytic study, Canada's central bank raised interest rates by a quarter point, marking the 5th time it has done so since the summer of July 2017. Canadian interest rates have remained relatively low since the global recession in 2008. Basically, this is it right here. I brought this article up because I wanted you guys to see this. How much will rate hikes cost you? So in Vancouver, it's going to cost you roughly almost $4,000 a year. Calgary, almost $4,600 a year. Winnipeg, $2,100 a year. Toronto, $3,548 a year. Montreal, $2,048 a year. Halifax, $2,246, and all of Canada as a benchmark whole, roughly $2,523. The people in Vancouver are taking the bigger bite, $3,943. And then Calgary's just followed, and so is Toronto. Toronto's getting a good kick in the butt at $3,548. So I kind of wanted to bring this article up, even though it's the same as the other one. But this one gives you a little bit of a breakdown on where prices are going, or where prices are headed when interest rates do go up, and what people are paying on the average mortgage. Let's move it on. 1/3 of Canadians feel bankruptcy ahead of expected interest rate hike. What did people believe was going to happen? That interest rates weren't going to go up? That interest rates were going to stay at record lows, historical lows forever? How would the country cope against a devaluing currency? I'm going to head off to the comment section in a second here. Canadians are bracing for another interest rate hike, and many are reporting they fear they are being pushed to the financial brink. It's widely expected that the Bank of Canada will raise the benchmark interest rate Wednesday. We read that part. And younger Canadians appear to be among the most vulnerable with the... Okay, so I'm going on and offline here, guys. Okay, I'm going on and off here, guys. Just hold tight. Younger Canadians appear to be among the most vulnerable, with the Ipsos survey showing 62% of millennials, those aged 18 to 34, are worried about paying their bills, and 46% are concerned about bankruptcy. 46% of young people that are just getting married and settling down. And yeah, my stream's going on and offline. The survey was conducted between September 10th and September 17th. And 2003 Canadians participated. So this is it, guys. This is gonna hurt. 2 words, said Fullerant. United States. So basically, when they have some economic momentum, we follow suit as number 1 trading partner. We kind of follow what they're doing. Oh god, I keep connecting and reconnecting here, guys. Last stream was like that. It kept shutting off. And then I lose a lot of viewers, and then it keeps shutting off, and losing viewers, shutting off. So Kevin Thompson has a condo for sale if anybody wants. It's in Oakville, Ontario. If anybody's interested, Kevin Thompson, in the comment section, you could... So this is kind of scaring me, this whole thing. 1/3 of Canadians fear bankruptcy ahead of expected, not unexpected, expected interest rate hikes.
It is expected the Bank of Canada is going to raise its benchmark interest rate tomorrow. If it does, the rate is going to jump from 1.5% to 1.75%.
It will be the 5th increase in just over a year, and many people with mortgages, loans, and other debts are growing concerned. Pat Foran has the results of a new survey on Consumer Alert. Pat.
Michelle and Ken, some Canadians, especially younger ones, feel if interest rates continue to rise, it could cause them serious money problems. 1/3 of those asked are concerned about bankruptcy, and more than half say they're worried about making their payments. The Bank of Canada is expected to push up its benchmark interest rate tomorrow to 1.75%. It's going to make it more expensive to get certain mortgages, car loans, and to...
Do you know what this means, people? Everything I've been saying for the longest time. If the average house was 300,000, then if interest rates do go up 1/4% or 0.5%, it's not that bad when you're borrowing $300,000 to buy a house. Unfortunately, people are paying $1.2 million to buy a house at record low interest rates, And guess what? Your payment's pretty low. But once interest rates need to come up, it's just out of reach for anybody. You know what I'm saying? Yeah, the higher the rates go, the cheaper the inventory gets. That's just plain and simple. So now, brace yourself in Vancouver. It looks like this is from a Business International Vancouver here. This is a newsletter that gets sent to me, and this is a very important newsletter. China buyers back hunting for Vancouver homes. This is posted 3 hours ago. Most China buyers are asking about Metro Vancouver properties priced in the $830,000 range, according to JY.com. So JY.com is like, I think that's more like their Amazon, but you buy houses like on it. Let's see what it looks like here. Yeah, it's like their Amazon or their real estate thing, and people are asking for homes in different countries. So a lot of people are asking for, there's Germany here, parts of Africa there. There's, I don't know what that is, but there's all kinds of places there to check out. So, oh, here, we can translate the page. Here we go. All right, this is not really, here we go. Australia, Canada. Then you go to Vancouver. So these are all the properties listed here, I guess. And Edmonton, British Columbia, all these places. Look at these ones in Quebec being listed. Wow. Look at this one in Quebec. There it is here. So that's that. We'll close that before I get confused here. Oops. There we go. 9 months after the BC government raised the foreign buyer's tax on Metro Vancouver homes to 20% of the property's value, searches by potential buyers in China have surged throughout the Jaiwei.com, China's biggest international real estate portal. But founder of the Vancouver chapter of the Asian Real Estate Association America, who recently returned from addressing a Beijing real estate conference, advised home sellers to damper their enthusiasm. As much as we don't like to think so, Canada is not as important to China buyers as other places, especially the United States, said Tina Mack, an agent with Coldwell Banker. Jaiwei.com are up for virtually every country, as worried the Chinese investors attempt to get money out of the country. Canada was barely mentioned and the Beijing Real Estate Conference, she noted. However, the number of inquiries on Metro Vancouver real estate between July and September exceeded even higher to reach 2017's first quarter. The international property website reported in response to an inquiry by Glacier Media. In raw numbers, searchers rose approximately 350 in the second quarter to nearly 800 in the third quarter. So, BC introduced the foreign buyer's tax at 15% in August 2016. That's when everybody fled to Toronto once they led this, and the other half fled to Seattle. And then raised to 20% in the provincial budgets in February. So that's what's happened there, and I've been covering this for eons with you guys. All right, let's move on. Oh, this is just a graph showing exclusive Chinese buyer interest in Metro Vancouver real estate. Soars again. This is just a chart showing you where they're looking for. So looking for the $800,000 mark to buy. So a lot of people are probably feeling confident that $800,000 would be a comfort zone, I guess, for people, right? Kevin Thompson in the comment section. Kevin Thompson, he's a fast act. I'll tell you, Kevin Thompson's a fast act. You better watch out. He has a HELOC too, and he has it lent out. He lent out his HELOC, I think. What was it, Kevin? At 20%? Okay, wow. Okay, let's get into the comment section before we head down to the United States here. Kevin Thompson, I'm in love when home prices go up. Opa is in the house. How many square feet is your condo, Kevin? Oakville is a nice place. Then Rainier says, Kevin Thompson, but I don't know why you invested in a condo. Should have went big in multiplexes, 16 units. The prices are literally pennies to the dollars back in 2008. That's true. And then Walking Journey says Dave Ramsey recommends 15% down and a 15-year fixed rate. We can't do that in Canada because the houses are millions of dollars. If you do 15% down and a 15% 15-year fixed rate on a 15-year amortization, the payments would be like on a typical house in Vancouver, you're looking at $7,000 to $12,000 a month, $15,000 a month. You can't do it for 15 years. It's got to be 30 years, and it's got to go around $4,000 or $5,000 a month, right? And then Seven says, Kevin won't call. Oakville is the best, says Kevin. Network 126 doesn't believe in home ownership or renting. Yes, Network 126, I think he's living in his car still. Okay, okay, let's move on to the United States of America. Home building stocks down 40%. Investors hope Fed gets the message and slows the rate hikes. So home building is going down in the United States, and this is a very good aggregation because most of the United States is still very, very affordable for people like me north of the border that lived in the city of Vancouver. A one-bedroom was $600,000 to $800,000, $800,000 for a one-bedroom condo. So most of the United States is still within affordability level. Benchmark, I still think, is around $265,000 to $300,000 for a detached home, like decent, like benchmark across with all the expensiveness added into that, right? But you can still pick up something in New Mexico for cheap. You can still pick up stuff in Texas for cheap. You can still pick up stuff in Florida dirt cheap. Florida's crashing right now. Prices down 50%. We got Bordy's in the comment section. So everyone wants Kevin Thompson to call in. So guys, add me on Skype, Mike Martins 1980. Mike Martins 1980 on Skype. I'm doing good, Bordy. Hope you're doing well, buddy. He's got a cool channel, guys. Check him out. Okay, so with home building stocks down 40%, investors hope Fed gets the message and slows rate hikes down. As the stock market and home builders in particular experience difficulty, it could put pressure on the Feds to ease its pace of interest rate hikes. Home builder shares plunged 40% from their mid-January high, a move reminiscent of their pre-financial crisis move starting in 2004. Mortgage rates hitting 5% could represent an important inflection point for housing. Let's see what this thing says here.
Certainly gives me some pause, and I've been counting all the corrections and mini corrections and two or 1 day sell-offs like the Brexit, and altogether in this bull market I count 62 panic attacks, and this is number 62. And the question is this just a panic attack or is this something more serious? I think this too shall pass. As you guys pointed out, the outlook for the global economy still looks decent, and maybe not great in emerging economies, but overall the feedback is we're still growing. The U.S. economy is still growing. I think what we're seeing here is stocks have gotten a lot cheaper, and I think it got a lot cheaper because there is concerns about a potential global recession, maybe even a U.S. recession. But I think this will just turn out to be an opportunity.
Brian, talk a little bit about the interplay of the corporate fundamentals, the decent credit markets with the way the market's reacting. If we got effectively a flat year-to-date performance in the S&P 500 right now with earnings up 20%, what does it mean for how the market is going to reward or not reward a slower pace of earnings growth next year, or maybe a...
It looks like a lot of people will be shorting from what it looks like here. A lot of people will be shorting banks. Laying puts, lots of puts. If there is a case to be made for the Federal Reserve to hold fire on interest rate hikes, it's happening now in the housing market and the stocks that track the industry. Home builder shares in the S&P 1500 recently sank 40% from their mid-January high. The move mirrors the early 2004 tumble that ultimately foreshadowed the coming housing collapse, which triggered the financial crisis. Bespoke Investment Group point. There it is here, guys. There it is here, upswing to 17. There's 2004 right there. Then here's the crash. Boom. Things really started to hit the 7 and 08. Then 09, things plateaued. And then 11, things started to somewhat pick up. The most recent drop in builders has come in tandem with the rise in a 10-year Treasury yield. Treasury, they're going to go up. The benchmark for most other rates, the noted move from a low 2.82% from August 22 to eclipse the critical 3% level where it appears to be staying. So we'll see what happens with that. Let's move on. Feds, Kaplan sees 3 more interest rate hikes likely. The U.S. Federal Reserve should continue raising interest rates at least 2, but probably 3 more times before assessing whether further rate hikes to restrain growth are warranted. Dallas Federal Reserve Bank President Robert Kaplan said on Wednesday, My best case for 2019 is to gradually and potentially raise the federal funds rate into a range of 2.5 and 2.75%, or more likely into the range of 2.75 to 3%, Kaplan said in an essay outlining policy views. So if Canada doesn't catch up with the United States, and it's going to start looking at a deflationary currency, and things are just going to start to look bad. Australia, they don't want to raise rates at all in Australia. We're going to get to Australia really soon here, guys. Australia, they don't want to touch nothing in Australia. Opa Levetti is saying average price Oakville condo is $582,000. She was just Googled. Steve the Plumber says it's going to be horrific. Bordy saying Rainier and the market is a beast, destroys a lot of people, but good investors are keeping cash in hand right now. Well, a lot of good investors are laying puts and they're laying shorts. So they're shorting the market, and a lot of them are making money shorting. Believe me, there's a lot of people shorting the market, especially the big banks. So that's that for that. So that covers the America. We already covered all of Canada, interest rate hikes and the big banks. Let's do a plug for myself here, and I'm going to do a plug for Buddy over Vancouver Financial Facebook group there. That financial group on Facebook, guys, that I like so much. I really want you guys to join this page. Vancouver Housing. It never comes up here, and I don't know why. Vancouver housing collapse right here. 3,659 members. Guys, if you guys could get on, we'll read a couple of titles off from there right now in a few seconds here. Let me move this over before we move on. So this is it. Vancouver, Metro Vancouver housing collapse here. Please. There you go. I'll add my wife on there. Let me know what you guys think. It's a really good page by Bill Ferguson here. 2-time world champ in the house here. And going into here, all better dwelling articles, and we're going to get to those articles right now. Twin Creek Place, West Vancouver condo for sale. People are posting following condos. Vancouver land rush over metro housing, market slows. People here are the early signs of China's stock market woes are starting to infect the rest of the world. Wow, $8 million for that house. Wow. $8 million for that house. Wow. I think my house is even bigger than that. Way bigger than that. Holy crap. What else we got here? There's a lot of people posting homes that people are keeping an eye on. So join it, guys. Vancouver housing collapse. Good page. It's growing. Let's get it up to 4,000 people. Guys, don't forget to subscribe to my channel too, please. Support the cause. I'm at 1,151. I just lost a subscriber. And follow me. I got a harassment series going on, being harassed here as a small business. We're trying to find out who's doing this, you know, who's making these accounts and who's been doing this, you know, like who are these people? Who are these personas? Who owns these personas? Who is been harassing me? You know what I'm saying? And, you know, I cover other stuff in my rants and lifestyle, natural gas. There's me and my family here at the pumpkin patch. And my videos keep getting flagged because there's a little bit of music in the background, and everybody freaks out. And then I get a thing where people, I'm using other music. Like, I need some you know, music in the background to make this video any better. You know what I'm saying? But anyways, that's us on our pumpkin patch there. We have spent a great few days together. There's my daughter. There's my teen right there. There's my golden child, my daughter. So anyways, so let's move on, guys. So follow my page, guys. It's really nice. I got lots going on. And, oh, this is a good one. A game store business from scratch. You guys get to see the store I built. This hole in the wall that I took over. This hole in the wall that I took over here. And my wife and kids, we all worked together. We kind of threw this place together. It was an absolute disaster. Watch that on my channel. Opening a business from scratch. Starting a home business from scratch. Super successful, guys. Super busy working from home. Living the Dream series is my series of leaving Vancouver and moving into town. And video games. And I kind of offset the channel so it's not so in a way where it's going to bring people to the channel where I get easily flagged and shut down. This is a Fed rate hikes, a timeline. So here's the timeline here of all the times that the Fed's raised interest rates. I'm gonna leave this with you guys. I don't want to read this one right now because we talked about this already a lot. It's from today's date. The article is called "A Timeline of the Fed Rate Hikes and Trump's Comments on Them." So here they are, all the rate hikes. And they're obviously doing this when Trump is in power, so if anything backfires, they'll just say, it's all Donald Trump, you shouldn't have voted him in, it's all his fault. That's what they do. Metro Vancouver residential land rush may be over, a housing market slows. So, all signs point to the end of the residential land rush in Lower Mainland. It's like a gold rush, I guess they want to call it, or like a diamond rush. According to the presentation given by the Urban Development Institute, all signs point to the end of residential land rush in the Lower Mainland. Throughout, Michael Ferreira of the Market Research of Urban Analytics, Inc., didn't use those exact words in a presentation last week as the Urban Development Institute. Toronto real estate consultancy Atlas Group reports that Metro Vancouver residential land deals worth $1 million and up stayed even, and $2.9 billion in the first 6 months of both 2017 and 2018. The number of transactions in the period increased by 5 from 438 last year to 443 in 2018. So basically, it's the bigger, higher-end markets, higher-end housing that gets basically neglected first from the big markets. And Victorian news: rate hike could compound slowdown of BC real housing market realtor. The Bank of Canada rate hike announced earlier Wednesday morning could continue to slow down in BC real estate market, according to Royal LePage. Let's move on. No one cares about Royal LePage. And Vancouver housing affordability at never seen before level, said economists. So, guys, it all boils down to affordability and what they could borrow. If you can't borrow money, you can't buy something. And when you can't buy something, it sits on the market. Let's move on. Better dwelling. Let's read some headlines. Canadians withdrawing from home equity is accelerating again. Oh, guys, everyone's tapping into their home equity. They're using it as potential ATM machine. Canadians withdrawing home equity accelerating again. Canadians aren't shying away from borrowing against their homes, even at higher interest rates. Office of Superintendent Financial Institution filings revealed that a balance of loans secured by real estate has reached new high in August. Slowing home price growth and higher costs of borrowing did little to slow the growth. Canadians Canadians hang on to more cash, but we're still looking at a credit slowdown. Vancouver is the fastest cooling real estate market in Canada. Canadian Real Estate Association numbers are showing a shift in SNLR in September. The indicator used to determine a buyer-seller's market actually fell into but two major markets. This week's Vancouver story is U.S. Fed is reporting negative Canadian real estate prices and Vancouver's condo market turns ice cold. Canadian real estate prices turn negative according to U.S. Federal Reserve. And Canada's best performing real estate markets aren't Toronto and Vancouver. I covered this one, guys, back earlier in the month. So that's better dwelling. Sydney. So let's head off to, before I head off to Australia and read some, kind of get a lowdown on what's going on in Australia. Let's see what the comments are saying here, guys. Investing in a home in Toronto will literally get you negative cash flow, and you'll have to rely on appreciation. Why would you do that when Montreal has a positive cash flow with greater appreciation? Yes. Montreal is going up, guys. Montreal is going up. There are bidding wars like crazy. Because the average price home in Montreal before this whole bidding war stuff was like $260,000, under $300,000. Very affordable. But unfortunately, it's now becoming out of affordability right now. So, someone's saying the Batman in the back is awesome. Yeah, man, that's my Batman. He's always watching over me, man. Steve the Plumber's in the comments saying, haha. Well, if you have millions of dollars kicking around and you don't care about real estate prices declining, then two ahead. Anyone with deep pockets full of cash are not buying now. So, let's go here. Let's start with Australia. Come on, no music. Sydney house prices now back to 2016 levels after 6.5% drop, data shows. So they're going back. Ooh, she's talking. Hold on.
Most of our capital cities recorded a decline, which has marginally improved affordability. Sydney experienced the largest annual fall out of all of our capital cities, but what this has created is a rare opportunity for buyers within the Sydney market. What we are seeing is a greater competition between vendors, and what this means for buyers is they have a greater power to negotiate, but also the luxury of time in making their purchasing decisions. What we've seen in Melbourne is prices fall over the quarter and over the year, but it's the middle and upper sector of the market that really have felt the brunt of this downturn. What this means for any buyer looking to upsize is certainly opportunity. We're still seeing that entry-level property price growing, but that mid to upper sector now is falling. Despite house prices in Brisbane still rising on that annual basis, they've experienced growth in this market since 2012. But what Brisbane has missed is the East Coast price surge. And so what that means is Brisbane remains a magnet for buyers looking for an affordable city to reside. Adelaide remains an incredibly robust market. We're still seeing house price growth over the year, and this market has experienced 5 years of consecutive annual price growth. But even considering it's had 5 years of growth, it remains one of Australia's most affordable cities. Canberra continues to buck the national slowing trend, and house prices continue to grow on that annual basis. But the pace of growth has eased relative to the same period last year. Residents are lured to Canberra by a relative affordability, a higher average wage, growing jobs prospects, but also the lifestyle the nation's capital has to offer. Despite price falls within Perth, the Perth market is showing some early signs of recovery. This really is concentrated within the upper sector of the market, but I think overall it will still take some time for the broader Perth market to recover. Hobart remains Australia's strongest capital city performer, still recording double-digit annual growth both for houses and for units. Buyers remain active within the Hobart market, and with a limited supply, this means pressure will remain on those prices.
That was really good, guys. That one went over the country here. Pretty much the whole country and where it's sitting at. And Hobart is big because Hobart was very inexpensive and everyone decided to move to Hobart, Tasmania Island. And everyone just moved there because it was affordable and a lot of people left. Okay, Sydney house prices now back to 2016 levels after 6.5% drop, data shows. Sydney house prices have fallen 6.5% over the past year, with the market resetting to 2016 level. New data shows a regulation-led slowdown saw the city's median home price drop. $76,616 in a year to September. The latest domain house price released on Thursday shows almost half of the drop was in the past quarter. Experts have described what is the steepest annual house price fall in decades as a necessary downturn after years of runaway prices. To slow the property market down, the Australian Prudential Regulation Authority and Reserve Bank thought the best way to do this was through credit tightening and macro-prudential measures. That's starting to bite. The AMP Capital chief economist Shane Oliver. Dominion senior research analyst Nicola Powell said that the latest downturn was unique because it had been driven by regulatory changes rather than interest rate hikes or economic downturn. No! People are running out of their money. They're using the equity in their homes, and people can't upgrade. A lot of people are stuck in 1- and 2-bedroom places and trying to start a family and can't upgrade. So a lot of people are leaving the bigger cities. So now it's pushing the national trend higher because the cities where the average houses were 200,000 are like 500,000-600,000 now, and it's making a whole hoopla of things. You know what I'm saying? Sydney buyers and sellers are now operating in housing market with prices at late 2016 level, she said. Its moderation driven by policy changing, really has never happened before. It controlled a downturn in the Sydney market because the house prices made such a continued growth over 5-6 years. There's the Sydney's median house price over time. So look at this. Now it's trending back down. Where do you think it's going to go? And they're admitting this is not even raising interest rates is the cause of it. What happens if they're going to have to raise interest rate with the Australian dollar tanking? Sydney's median house price is now at $1.1 million, down 8.1% since the market peak in mid-2017. So if you go up 0.25%, your payments are going to go up $6,000 to $9,000 a year if your interest rates go up at $1.1 million a year, people. That's why in Australia they're very scared to raise interest rates. And property prices have further to fall, according to Dr. Oliver, who recently revised his forecast to a 20% top-to-bottom fall by 2020. Credit tightening had proved more effective than he expected. And auction clearance rates were also lower than anticipated. Such a fall would put Sydney prices back to 2015 levels. Here it goes here. Capital City median house prices, September quarter. There's your change. Your change is right there. There's Melbourne, there's Brisbane, Adelaide, Canberra, Perth, Hobart, Darwin, and then there's a national average right there. So I think Sydney is going to push down the entire national average because it's so way overpriced. There's the Sydney median unit price over time. So right now you can see this trend here for the last 3 months. Oh, this is per year, every September per year that they've been doing. So it's been hovering lately. So it's been very stagnated. Let's move on. Canberra's clearance rate falls below 50%. It's from today's date. As rain, hail, and lightning fell across Canberra on Saturday, so did the auction clearance rate. Canberra's clearance rate plummeted to a low 45%, down from 56% on the previous weekend. The results from 61 reported results is the second lowest clearance rate of 2018. In July, the clearance rate dropped 43%. However, there were only 34 scheduled auctions. It's going to go back to the old days, people, where you go see a house, you put an offer, they counter the offer, you send in an inspection, you get the inspection done. There's no more auctions. Canberra's most expensive sales were recorded at 83 Captain Cook Crescent, which sold for $1.53 million for that. Yeah! That's what you call bang for the buck. Yeah! The property was shortly contested and it created a lot of interest in the local market, she said. There were 3 other sales above $1 million on Saturday, and they're going over the sales and auction clearance. Yeah! $5 million for that! Yeah! You know what I'm saying? Yeah! So, woo! Let's move on. Melbourne house prices dropped 4% in 3 months. New data shows, again. Melbourne's median house price dropped 3.9% in 3 months and is falling faster than any other capital city. New data shows. The latest slide puts the city's house price at the same level as those recorded in early 2017, according to the latest quarterly Domain House Price Report, released on Thursday as the first annual decline in 6 years. Prices have headed south since December, when the median hit its peak of $909,000 on the heels of 5-year rapid growth after a $35,000 quarterly drop. The median is now sitting at $852,000. The falls follow the largest runs of consecutive growth in recent history, when house price rose 72.9% in just over 5 years. Holy, what a return! Domain senior research analyst Nicola Powell said having this pullback is a natural dynamics of the property cycle. There's the Melbourne median house price over time. So here it is. It's dropping like a rock, and it's one of the fastest falling. There's the Melbourne median unit price over time. You have it here by year from 2000 all the way to 18. The market has taken a turn in a good way. The buying frenzy has calmed down. We noticed that good properties were selling at reasonable price. I still don't think $1.1 million is reasonable for anything unless it's got a helicopter pad, 2 tennis courts, 2 tennis courts, a pool, an indoor pool, and like it built on the intercoastal so you could park your boat in your backyard and just go out and then go back to the ocean if you want. So that's what's happening right now. Since September last year, roughly $200,000 has been shaved off the median house price in both regions. What happened to those real estate agents? If you don't buy now, you're never going to own. You will never own. If you don't buy, you'll be bought out of the market forever. What happened to those people? I don't see them anymore. We're buy now. You will never own. You will be forever forgotten in this oblivion. Since September, 200,000 shaved. Guys, 200 large shaved off your value. Try going to the mob and saying, I'm going to shave off $200,000 of what you lent me because I don't think it was worth that much. You know what I'm saying? Despite October being one of the city's biggest selling months of the year, auction clearance rates have sunk below 15%. Springtime in the southern hemisphere. Go over and buy. It's buying season. Prices are going to go up in the spring in Australia. I haven't seen nothing. I read all the articles. Oh, yeah, they're going to go up. It's just this little dip we get, towards the end of winter and spring hits and everybody's out buying homes. No one's buying homes. Why? Because nobody could afford it and nobody could secure the financing. And that's what's happening. All right, let's keep going here. Property's ticking time bomb is about to go off with 1 million Aussies affected. Ooh, let's look at this. It's got a bomb in it. Let's watch this video. Hope it doesn't have music. Oh, it's got music. The Aussie creators are of dirty dancing with banks. There's only one way to sum up our housing market. It'll get worse before it gets better. Australia Price Index. Capital city prices have fallen on year over year. While it might seem like a good time to buy, experts fear a crash with dire consequences. There's Martin North. He's got a good channel. Check him out. Tighter lending and higher interest rates could shift downturn to potential disaster. There's $1.7 trillion held by the banks in mortgages for owner-occupiers and investors. That's higher than any other country. That it definitely is. The Western world by long. So what's next? Sellers need to set more realistic values for current market. Buyers, take your time. There's lots to choose from and not much competition. So guys, it's going to be a buyer's market, but be careful when you buy, guys. Just relax, breathe, especially if you've been waiting on the sidelines. And guys, if you guys want, check out Martin North, the Walking World. Martin North has his own channel. He's a analytical analyst in Australia, and he knows the itty-gritty numbers and all the dirt that's been going on in Australia and kind of trying to make sense of it all so viewers could understand. I don't want to get too technical when it comes to. I don't want to get super technical. I want to keep it really. Hey, what's going on? This is what these guys are saying in this article. What do you guys think is happening on the ground? People call in, give us an insight. There's a lot of good channels out there for you guys to check out. Martin North is definitely one of them when it comes to real analytics and real talk and real playing the understanding what the game is, itty-gritty numbers and stuff. So comment section is going nuts. So a lot of people fighting in the guys. We need to relax in the comment section, please. Someone's saying to buy gold and silver and sit tight. Okay, let's keep going here. So, what is happening? Almost 1 million Australian homeowners will be dealt a serious budget blow at the start of next year. It could be the struggling property market's ticking time bomb. So, again, back to what I said before, more than 900,000 of them will be expiring from January, reverting to principal and interest payments. This is the big thing that's happening in Australia. A lot of people took interest-only mortgages because a lot of the banks just believed that housing was just going to keep going up and nowhere but to go up. So if you just pay the interest only, you can build a bit of equity over a couple of years and you could refinance and have a bit of equity there. You know what I'm saying? But no, it didn't happen. So interest-only mortgages is an absolute nightmare. I recommend for people to start putting things into place, measures into place to fix this problem and get out of the mortgage or the current financial situation they are in. And look at this. Oil, gold. Gold is up right now. Oil's down. Oil's slumping right now. U.S. Australian dollars at 70 cents. It's up right now. Market's just open in Australia, by the way. Australian stock market, stock exchange is down 2.2%. Wow. That's pretty tight. It's heavy, people. Australia's banks should prepare accordingly for stricter accounting standards on risky home loans. Another one, guys, a lot of junk on the books. A lot of underwriters approving deals that should not be approved. Negative gearing, all that crap. People expensing their house like it's a business. And if they owe taxes at the end of the year, they use the negative gearing on their home to offset it so they don't pay so much tax. Stephanie Ravango in the comment section is saying to buy oil and gas. She's 100% right on that. I've been investing heavily in oil right now and moving out of the pot market. I sold all my pot stocks in the last week and a half, 2 weeks ago. So I sold all my pot stocks. Emma Murray saying, Mike Martins, what is your opinion on starter homes? Better buy a starter or wait, or buy more long-term home? Buy a more long-term home. That's what I did. I saved up and I bought this house, and I never have to upgrade this house ever in a million years. Well, I mean, I have to renovate it over time, but I never have to upgrade to a bigger house. I have tons of bedrooms in here and tons of bathrooms. And I think I have 7 baths in this house. I don't have to worry. I don't have to upgrade anything until I get older, and then I can leave this for my kids and retire with my wife to the Philippines. So Steve the Plumber is going to be live with us in a bit. So guys, what I'm going to ask for is I'm going to do my first hour of the show, and then I'll have people call in after the first hour, after I get through some of these articles so people can see what's going on. So give me a few more minutes to finish these articles, and we'll move on to callers from all over the English-speaking world. House prices falling over $1,000 a week in Sydney and Melbourne. Again, $1,000 a week, that's 52 large a year on average. Australian housing bubble could pop, says experts. You know, what I don't understand about this is why are these people saying this now? Where were these people a year ago? I was here tooting my horn. I was here telling everybody none of this is normal. Hey, why are you paying 15 times more your salary to buy a house? That's not normal. Oh, Mike, you don't know what you're talking about. Why are these professionals 2, 3, 4? Go back to my videos. My channel was taken down, and I had to restart my channel, I think, in 2015. And before that, I had another channel where I was talking about housing, going back to 2000 since the 2010 Winter Olympics. I don't know if anybody remembers that channel, but it was still called Mike Martin's, and I started it during the Winter Olympics in Vancouver in 2010, talking about the housing market and the bubble, and that's when I was a regional manager for a major lending facility. So let's move on. So I got people saying that the so company wins a $35 million win against Westpac, likely to be thrown out. Again, a lot of junk on the books. And why are people lending money? There's their stock. Is that their stock right now? Yeah, it's performing very bad. Good stock to short right now, guys. If you wanna lay a put on that, if you wanna lay a put on the Westpac right now, they're feeling the brunt right now, and that's really definitely a bank or a financial institution to lay a put on right now. Let's move on. I got 1 year on how has the government performed housing. So this is from New Zealand, guys. It was part of the Labour's election campaign addressing the country's skyrocketing house prices and helping first home buyers get a step in the ladder. So we are looking at what happened. Its ban on foreign buyers' existing homes came into effect after some softening criticism. So New Zealand has implemented the law into place because New Zealand believes that it's more mainly foreign buyers that are driving up the prices. Looking to buy property overseas, these countries don't want your money. So there's a list of countries. So they pick on New Zealand here. Basically, they pick on New Zealand here more because Kiwis only. New Zealand bans foreigners from buying a home. The median home price in New Zealand has surged more than 57% since 2010, and now the Kiwi nation has decided to do something about it. Ban outsiders from buying their homes. So that's what they believe in, and I'm a strong believer that a lot of foreign money that comes in is obviously manipulating the markets, and it's forcing people out of cities and moving to more cheaper accommodations, and then the local people that actually contribute to pay the infrastructure and contribute being taxed on their labor are the ones that are actually keeping everything afloat. You know what I'm saying? And then a lot of the people that can't afford anymore start leaving the country, right? And a lot of New Zealanders have been heading to Australia for especially with the black mold and all the problems they've been having. Okay, guys, it's been an hour now, and I'm going to turn on Skype. I'm going to head on to Skype, guys. Oop, I sold something on eBay. I'm always selling stuff on eBay, guys. Like every hour I'm selling stuff. Just opening Skype here, guys. I can't have anybody panicking in the comments right now. So let's get Skype open. Where are you, Skype Ishta? Where's my Skype? Where are you, beautiful Skype? Skype is so much clearer than using a phone line. Phone line sucks. It's just all gargled transmissions, you know what I'm saying? Guys, like, you know, I heard a joke today. It was really good. I want to share it with you guys. Let's just hope they don't find life on other planets, because Justin Trudeau will be sending them money. That's a good one, Prime Minister of Canada. Let's just hope they don't find... Let's see if Stephanie's available. I see her in the comments. Let's see if she wants to talk about what's going on. I'm trying to see if I could call her. Let's see if Stephanie picks up. Well, Stephanie's not answering the phone. I wanted to get her to come and give us an insight on what's happening. We had Anthony on the show yesterday. Okay, here we go. Hello?
Mike, how are you doing?
I'm doing fantastic. Thanks for joining us in the comments section. And Stephanie, what's happening in the housing in your area? Where are you?
I'm in Orlando, Florida,
Okay.
about maybe, I'd say, an hour to the east of Disney World area.
Okay, so you're closer to Jacksonville.
No, I'm not quite that far. I'm more because I decided I couldn't get a real paying job in the world. I had no choice but to return back to school. When I should be retiring, I feel like, or of course I'm not that old, but I was in the military and I had skills, good skills, but I just didn't feel satisfaction, and I had to return back to school. So I'm in college now, and I'm trying to get my master's degree, and things are going well, but I had to uproot from California to Orlando because my studio not even one bedroom, but a studio apartment in Southern California shot up to over $1,800 a month for 456 square feet.
Well, 1,800 pesos or dollars?
Dollars.
Oh my goodness.
Yeah.
Oh my goodness.
And I was commuting. I was going to USC, which is downtown, just south of downtown LA. Not far from Skid Row, mind you. And so I was doing almost 2 hours, or I'd say 4 hours traffic round trip every day. And in LA, there's no real transportation there. There's no transportation. You have to commute in a car. So I was leaving my house at 4 a.m. and not getting home till midnight every day, going to school.
What?
And I did that I did that for one semester, and I said, I can't do this anymore. I need to rethink this. So I applied, and I got accepted here in Florida, the University of Central Florida, to be in the film department and make movies and get my scripts to come alive and be in the theater soon, I hope.
Yeah, well, I hope that goes your way. I mean, everyone starts out somewhere, right?
Yes, but I have been following this since this housing market situation debacle since 2008. That is when I ended up, or right just before it actually happened, I ended up homeless. I had to go bankrupt. I had an okay job working for the state of California, but out there it's very expensive, and sadly I went through a divorce. You know how that goes. But I had little or no money, and I had roommates, and they kept stiffing me on the rent, having to cough up $1,600 a month, and I just couldn't do it anymore. So I ended up homeless, and I had my car repoed. I had to go bankrupt, and I ended up sleeping on a friend's sofa whose house went into foreclosure. We eventually had to vacate. But then and there, I had this rude awakening that this is not right. Something is wrong. I need to find out what's going on and prepare, because I had a feeling in my spirit something else was going to happen, that this situation had not been corrected, especially in the Southern California area. My area had increased from about 30 to 35% Asian population to 75%.
Wow.
And all the businesses were turning into languages I didn't understand. And I said, there's a problem here. We're getting bought out and sold out in this country. Something is wrong. And that's when I got into astrology, because I said, now I get it. Now I see what's happening. Now I understand everything I've gone through in my life and where I'm going and what I'm supposed to be doing, so that I'm better prepared in the future. And I tell you, Mike, I am not kidding you, and I would have no reason to lie or spread fear other to make everybody prepared, all your listeners. But by June and July of next year, we are going to have a serious housing crisis and crash. People are going to lose more than half to 3/4 of the value of their houses. It's not going to be cool. I would say definitely after the interest rates get hiked up in January of 2019, by March, when the south and the north nodes change into different signs, every 18 and a half years this has happened, dating way back in time during the bombing of Hiroshima. Then they had JFK, who was assassinated.
No, he was murdered. He wasn't assassinated. He was murdered.
Well, yeah, you're right. He was murdered. We had that. That's when the notes had switched, and then Reagan we had an attempted assassination on his life back in the 80s, early 80s.
That was twice or thrice, right?
Right. Yeah. But I mean, but they meant to kill him. You know. And then if you don't recall, sadly, we had the 9/11. With the towers coming down.
Right.
And mind you, if you look over history, after every crisis that we've had financially, to take our attention off of that, we've always had some kind of event or war or something to take people's attention off of their pocketbooks and what's happening. And so that behind the scenes, the Federal Reserve is figuring out the next game plan so that they can come in and swoop in and take everybody's property and be the savior, while these wars are taking place. It's manipulated.
It is.
It's
totally.
Nothing but we live in the United States of America is an oligarchy. There's just no two ways about it.
But
we live in an oligarchy.
But you guys for the longest time were one of the luckiest nations, especially when Andrew Jackson was your president, when he abolished the entire banking system and dismantled it and sent it to hell. And then
precisely. And Trump has a picture of Jackson in his office because, again, and why do you think JFK was assassinated? JFK was assassinated because he wanted to do away with the Federal Reserve.
That's right.
And he made that clear. And also because he was not a member of the Masons. He refused to join the Masons. And it was a matter of time, I would say, days.
John F. Kennedy was Catholic, right? So he wouldn't join the Masons.
Exactly.
So.
But here, Donald Trump is trying to do away with the Federal Reserve. He's playing their game right now, and though it may Donald Trump is not a stupid man. Donald Trump he's a businessman. He knows what's going on. He sees that trade has not been fair with China for a number of years, and now with this housing market debacle, the Federal Reserve has manipulated the economy around the world, not just in the United States, but worldwide, as you're well pointing out.
You know what?
And astrology confirms all this. And I'm telling you, Mike, we're going to go through a reset, and I'm telling you the dollar is going to crash. And as soon as these bonds, I talked to a friend that I know that's is very smart. He's on Wall Street. He tells me as soon as the bond market starts going bye-bye and these bonds start getting sold, and as soon as that happens, game over. I mean, we're going into a worldwide crisis, not just in the United States, because the U.S. dollar is the main currency that the world turns to. But we are going to go into, it's going to be war. It's going to be sad. But, Mike, we didn't have our reset back in 2008.
No, it was partial. It was partial. There was bail-ins, and then there was a lot of pensions were lost, and a lot of people's savings were, it was a partial. It wasn't a full-blown reset. That's the problem.
Precisely. And people have, we in the United States and as well as Canada, we don't make anything anymore. And you see, our saving grace from World War I, World War II, the Roaring 20s was manufacturing. And now that China has absorbed everything, we have nothing to fall back on.
Well, there's
any
one thing.
longer.
There's one thing. What I keep bringing this up on my show, but do you know at the turn of the century, 1 out of 3 things in the world was made in America?
Exactly.
And do you know that
see?
Donald Trump's passing one bill that I really hope he passes, and this is going to help home businesses across America and potentially in Canada too. He's looking at scrapping the cheap mailing from China, cheap mailing, wholesale mailing. So people that sell from home in China that are mailing out junk in the factory they live in, they're mailing out this junk and they're only paying $1 to ship to America when we're paying $15, $20 to ship to the next province or state. He's going to scrap that from China, and that cheap, mailing. I brought it up the other day, the article, and if he passes that bill, it's going to help a lot of small businesses in Canada and the United States operate from home and actually compete with shipping from China now.
Well, he needs to do something, Mike, and he's the only sitting president. People cannot like him all they want.
Mm-hmm.
I wouldn't say I love him. Unfortunately, I wasn't able to vote this past election because I was in between moving from California to Florida. And so I wasn't able to vote. Unfortunately, I wasn't registered here when I was here, and I wasn't able to go back in California and vote. So I didn't get to vote. But I'm telling you, the media is full of garbage.
Oh, we know that.
They know they're full of garbage because everybody I talk to, they want their jobs back, and the pay, people's pay has only gone up maybe $600 in 10 years, and then look how much taxes cost now, how much, and how much the cost of food and the cost of a house. And I mean, in California, mind you, I'm a military veteran. And I was laughed at. Every time I would go to an auction to bid on a house, I was laughed at. They wanted $500,000 down. I said, basically, they wanted me to pay cash for the house. Yeah. I said, but I'm a military veteran. I have a pre-approval. And they said, well, we're sorry, but you've been outbid. You don't have cash. And there would be like 10 different foreign people standing there with bags of cash, check in hand. I'm like, you know what? I can't compete with this. I got run out of California. I had lived there.
It's not just, you know what? Hand to God, it's probably the best thing because California is turning into a really bad cesspool. I'm happy you are out of there and you're in the state of Florida is amazing. Believe me, state of Florida is great. I mean, it's got potential. It's got lots of room for growth. It's still affordable. Housing prices are dipping right now, like 20-30% down right now from last year. And there is potential there to grow. Believe me, there's potential. You just have to play your right cards. You got to play your trump card at the right time.
Well, yeah, and the one bedrooms here 2 years ago, they were going for maybe $900 close by campus. Unfortunately, those same one bedrooms are now going for around $1,200, which I know to some people that's not much of a jump, but when you're a college student, that's a lot of money. You know? It's like, I'm trying to watch every penny I can without going into huge student loan debt. Even though the military, I have my benefits helping me pay to go to college, but and I don't have to sit 4 hours in traffic every day.
That was a nice. So what I'm going to do is I want to have you on Mike in the Night Show on Saturdays when we talk about broader topics outside of housing, and I'll have you as our astrological or astronomer. And then if there's a really hot topic that we're covering, I'll give you forewarning on pulling an astrological chart on something or somebody that we're talking about in whatever topic that's going on. And then we could go over it together and you could explain where things are headed for that person in the future potentially.
Yes, because it does make a big difference. Right now in the U.S.'s chart, I mean, there's been different astrologers around the world. I don't go by the Western tropical system, which is based on seasons. I go by the sidereal, the true placement of where these planets are actually at, where even the astronauts, the astronomers say, okay, Jupiter's in Scorpio right now, and Saturn is in Sagittarius, where the Western astrologers saying, oh, well, Jupiter's almost going into Sagittarius and Saturn is truly in Capricorn. No, that's based on seasons. That's not the true accurate placement of it. They have their own system. I don't go by that system. The Vedic astrology, it dates back to thousands of years back into the Hindus. How the wise men, how they were able to find find the North Star and find Jesus and all this. That's how they were able. They went by. They didn't have compasses back in the day.
Well, that's what the Portuguese used when they were sailing across when they sailed across way before the Spanish did. And they were using stars to navigate, and that's how a lot of their astrological charts are still being used today.
Yes, and if people can believe it or not, all they want. I'm just letting you know, I was somewhat skeptical in the beginning, but I had a really good astrology teacher that helped me, and they confirmed everything about my life, and my jaw was dropping. I didn't have to tell them anything. They could just look at my chart and go, okay, this happened, this happened. I go, oh my God, how did you know that? And you like this and this and this, and I'm like, oh my God, how did you know that?
Okay.
It's written. Your chart is based on your blueprint. It's who you are. It's like your thumbprint, your own unique thumbprint based on your ascendant, your moon sign, your sun sign, where your planet Mars is, all this stuff.
Okay.
See, I can probably look at you and I can go, okay, Mike, I think you're a Cancer ascendant. I can tell you right now, and you're Cancer, not only just a Cancer ascendant, you were born you have the nakshatra Pusha, which is the great wealthy one. But if you get married before you're 35 years of age, it will lead to divorce.
Wow.
But that right now, because if your wife is pregnant, see, Jupiter is in your 5th house, which means pregnancy, which means children, which means potentially if you have this child, beware, unless you want more kids, I don't know, potentially your wife could get pregnant again.
Okay, I'll be careful
Jupiter
with
being in the 5th house, you could have another child on the way.
Okay, I'll be very careful with that. Anyways, I'm gonna let you go because we're gonna have you on Mike of the Night, so we could do we could start from the beginning of the whole astrology thing with you, and we could discuss different things and events that you see forthcoming with us. So I want to thank you for coming on, and I'll have you on Saturday night's show when we have a broader topic and a more more to talk about when it comes outside of housing. Okay.
Yes, because I have some predictions to make, and as I told you, by August of next year, it would definitely behoove you to be invested in oil and gas, because the price of oil and gas will be going up.
Well, if it makes you feel any better, I invested a ton of oil and gas today.
That is awesome. It's gonna go a little up and down, but I'm telling you, in the long term, oil and gas, it's gonna be where it's at.
Okay, thank you so much. And stay strong and keep us posted on how you're doing, okay?
I will, and you said possibly on Saturday?
Yeah, Mike of the Night. We'll have you on, okay?
Around what time? Because I'm like a 3-hour difference from you on the East Coast.
Yeah, because I started around 9 p.m. my time. It's like really late. So just message me in the comment section if you're awake, okay?
I'm usually awake. I have some schoolwork to do this weekend, and I may be going to Disney World for Halloween, trick-or-treating,
Sure, okay. Okay.
But either way, it's usually fireworks and all that are done with by 11, 12, so I would give you a call or message you letting you know.
Okay, thank you so much, Stephanie.
All right, God bless, Mike.
God bless you.
Take care.
Good night.
All right, bye-bye.
Bye. So, guys, that's our astrological reader, and she'll be on the Mike in the Night going forward. She had a very interesting housing story to share with us, how she left California and moved to Florida, now outside of Orlando. And, yeah, that's really good. We need an astrologer on the channel once in a while to give us any signs or what's happening or what's moving around on Saturday nights. Just once in a blue moon, we'll have her on just to say, okay, what's happening with this? Then we get our truth analyst, Evan, on from Hong Kong, who could break it down for us. Then we could get another perspective from someone that could read the stars. You know what I'm saying? I don't disprove anything until it's proven fake, right? So a lot of this astrology stuff and reading the stars has been miraculously on par with a lot of things, you know what I'm saying? So anyways, Rainier saying, let's stick to facts, and then Art and Soul says, it will be Mike and the Stars on astrology night. Yeah, once in a blue moon, guys. It's a moon. Anyways, guys, no, it's good to have a range of you know, it's not like we're talking about Bigfoot and chupacabras and UFOs and stuff. We just want angles. We want to see every angle. If we got to get a psychic on the show for something to figure something out, then we'll get a psychic. I don't care. We need answers because obviously we're not finding them. You know, we've been lied to the last, what, 100 years? Lost Canuck on the saying Mike, mortgage companies cause closing because of fraud. So, yes, I have Baytex stock. Someone asked me if I bought Baytex. Yeah, I have some Baytex. Why? I have lots of Baytex. And let's see what's going on here. Okay, guys, let's get... I wonder if Mario DeCettis is still awake. He could give me a call and tell me what's going on in the housing sector there. Be nice to know. He's telling me that there's a huge problem with what was he saying? Mortgage companies going bankrupt because of fraud and stuff. Well, they have no choice but to shut their doors, right? So, I mean, it's tough. It's tough to stay open when you got lawsuits against you. The best thing is to file for bankruptcy and close, right? Lots of people. So, guys, don't forget to check my channel out. I wonder where Steve is. Mario, are you there, buddy? I hope, Brother John should just call in. Brother John's right there. Brother John should give me a call, and Brother John should be on the show, man. He's always in the comment section. He should be here. He should call in and tell us what is going on in his point of view, where things are headed. He's always giving positive or giving constructive criticism, which is good. Kevin Thompson's a lost cause. And Art and Soul saying, you're adorable, Mike. I appreciate everything you do. Thank you so much, Art and Soul. Check out James Randi, Mike. I'm not checking out James Randi because James Randi ain't checking out me. I'm just kidding. I don't know who that is, but I'll look it up. No problem. And yeah, Brother John, if you want to be on the show, add me, Mike Martins 1980 on Skype. Let's see who else we got available here. Who is kicking around? I wonder if Working on It is around, because she was talking about a huge housing problem in Alberta. It would be good to see what she has to say. Be nice to know what is happening there. And then I'm going to have... Brett's not in the comments, surprisingly enough. He's always in the comments. I wonder if Alex is... I don't think he's on. Yeah, he hasn't been on in a while. I don't want to bug a lot of these people because I don't know what they're up to, right? John Doe's here. So I'm just trying to figure out who and what's going on, and people from all over the world. English-speaking countries primarily are suffering with this problem. Oh, Lost Canuck. Adrian Sharp, give me a ring. Kevin owns a condo. Adrian Sharp. Oh, you're here. And then I'll call... where are you, Adrian Sharp? You're in New Zealand. Good, I'll call you after. Because let me call the Lost Canuck first. And remind me, Adrian, to call you after the Lost Canuck. because he's on Eastern Standard Time, and right now it's like 1 o'clock in the morning. Let's get him first, and I know it's like 1 o'clock in the afternoon in New Zealand, and it's like Thursday there, so it's time to call New Zealand. So let's call the Lost Canuck, get him on the horn here. Let's see if it rings.
Hello?
Who the hell is this?
Hey, Mike, it's Lost Canuck. How are you, brother?
Good. What are you up to? What are you up so late for? It's like, it's not Mike in the night, it's Mike in the morning.
No, it's only 10:30 right now in Barrie.
Okay. Oh,
Not
yeah.
that late.
I'm just feeling that it's a lot later because I've been talking for an hour and a half.
Yeah, I know. I just want to say, I don't want you to give up on people around your neighborhood. You're always going to get. I know you had a video out that people were lashing at you. And,
yeah, it's just we're just trying to find out who these personas are, who all these people are making these accounts, and if these are real accounts, why are these people attacking me and my wife and messaging my customers in my store?
Yeah, it's unbelievable. Who knows? Maybe they're real estate agents. Who knows, right?
Yeah.
Nobody knows. Nobody knows.
Yeah, nobody knows.
But that's, as long as everybody's good, buddy, that's all you got to worry about.
Yes. So, Mario, what's going on, buddy, with these companies getting shut down because of fraud?
Well, we have Fortress Development, as we know. They're huge. There's apparently companies that invested up to $920 million. They've only accounted for close to 400. So there's 500 and change missing, or you could say a lucrative disappearance. We have mortgage companies that are tied in, and they go bankrupt before the investigation starts. So you know they're guilty right there.
Mm-hmm.
And I think part of Fortress Development, I wouldn't be surprised if we see the Toronto Real Estate Board investing money there too. You know what
the problem is, Mario, and I think I've come to terms with this. Do you know why people are breaking the law left, right, and center?
To survive.
Yes, but do you know why these bigger companies that have a lot of money are doing it? Is because nobody's getting penalized. No one's going to jail anymore.
No. And nobody's being accounted for it. So they'll blame a company, but they don't blame the individual that practices it, right?
Yeah, it's
they'll
always
just blame a company, and there's no names.
Yeah. Are you seeing incentives there? Free cars if you buy a condo? I saw a lot of advertising for that.
Well, I had a couple guys sending me messages, and also when I got on your live stream, on your message, they said invest condos in Barrie. People got to understand, in Barrie, even when it was slow, I'll even go back. When I was framing in Barrie, in 1995, they were giving out free cars because they couldn't sell the houses up here. Okay? So now what's happening is the biggest developer that's up in Barrie is Pratt Homes. So I'm not trying to, like I said on my videos, I'm not here to criticize any builder. I wish them all well.
Mm-hmm.
But the thing is, Mike, we've always said it. We're investing into structure that we don't need. We don't have the capacity for room for cars to drive on, roads to be fixed on. We're spending on structure, homes, and condos. So they've advertised now when you're driving, there's not a soul in the sales office during the week. When I go jogging every night, and there's nobody in there except the people that work there. And they have all these signs outside. Yeah, they sold phase one because people can understand. How do you sell a product that's a hot market? Is because they put very little deposit to save their spots.
Mm-hmm.
So they're asking for $15,000 for a $500,000 room in the sky. They ask for a $15,000 deposit, and they give you 3 to 6 months to pay it. Now, if you're making $80,000 to $75,000, let's say, that'd be easy for you to pay if you don't own a home. But at the end of the day, when you have to close, And I'm telling you, Mike, the people that are walking away from the deposits are unbearable. There's just in Angus alone, a one builder, I just told you last time, 7 people walked away, 60 grand. They walked away from their homes.
Well, they'd rather lose 60 large than go in the hole even further, right?
I'm not trying to say they're suckers for walking away. I think the people that are closing and getting their parents and relatives to help them for their down deposit are going to be the suckers.
Well, because
we're going to have a rise of bankruptcies by 2019. You said it before, and I'm going to guarantee it by February, March. We're going to be at a 30% increase of bankruptcies.
Oh, easy, especially with people that were paying interest only, or people that have HELOCs or second mortgages now that they have to start paying down with higher interest rates. Now the Bank of Canada raised interest rates this morning.
That's right, and you know what upsets me, Mike? When the government lets all this free money and free loaning and free 85 to 90% on homes be so exercised like it's a normal thing in Canada, where we should step back and say, no, you get a mortgage on your house, you cannot get a second mortgage on the house.
Okay.
It doesn't work like that.
Yeah.
And I think that's where we're getting at. We're getting at a problem where people, like you said it perfect. ATM machine of their homes. That's what's happening.
I've been saying that for 5 years.
Yeah, exactly. And now you have people getting a third mortgage and almost a fourth mortgage, and just trying to pay, and that's what we're living on. Now, Mike, did you see the new car sales in the States? What's happening?
Oh, they're especially Europe. Did you see Europe too?
Yeah.
Huge decline in Europe, 28% decline. You know why? People aren't buying the Mercedes and the BMWs and stuff because they can't take the equity out of their homes to buy these fancy cars to compete with their neighbors.
Yeah, and another thing, Mike, you said it the other day. You remember they were talking about the student loans and all that? The federal government, a beautiful liberal government, wrote them off. I think it was, how much money was it?
I don't know, like $1 billion?
I think it was 1.8 billion or something like that they wrote off. So now they wrote it off. Let me ask anybody out there that does, even somebody that does these loans should be on your show, or somebody that works on that side. They don't have to give us their real name. How many are actually foreign exchange students? Did we ever look into that? Did we ever let these people come into our country, go to school, and you know and I know, CIBC had this big advertising, oh, you could be a foreign exchange student. As long as you have 20% down, we'll give you a mortgage on that house. So how many did we sell of those like that? How many did they default on those payments or default on student loans? What's the percentage? Now you have Chrysler that we had to give them a write-off of $2.6 billion. So we as taxpayers had to swallow that again. And you got Bombardier, how many times we've helped them. And what's next? And that's why people have to understand one thing. If we do not put people in power that we think is going to be right, and I understand, a lot of people in Toronto are upset. I've been talking to a lot of people up here when Faith came in third. They didn't even mention it in the media, number one. Number two is she could have got a lot more votes if she was able to publicize her campaign properly, but of course it's not done. And I feel sorry for who's ever living in Toronto. I really feel sorry for them, because the next 4 years nothing's going to get done except more condos going up, more debt is going to be there, and there's nobody watching their backs. And I'm telling you right now, if people think that this market nothing's going to happen, everybody has a free opinion. I don't mind that. But I can, Mike, you know and I know, I can't see this country going the way it's going.
Oh no, it can't go any. It just can't go any further, dude. It's at the point of the point of no return has passed. Now we're at the point of free fall for everything.
Yeah, and I'm going to look into that investment of the oil and the gas.
No, I'm going to be really frank with you, Mario. I don't know anything, but I'm going to tell you as a friend. I honestly think that a lot of oil is severely undervalued. You got stocks that were once at $50, $60 a share trading for $3 right now.
Yeah, I know. That's what I told my wife. We're going to start investing into that. Go to buy.
Well, be careful. Do your research, okay? Don't take my word on anything. Just do your research. Look at it. Look at the companies. Look at. You know what I'm looking at those companies, Mario?
Yes.
I'm looking at the collateral they have, how much infrastructure they own, how much trucks they have, how much debt they have. These companies are enormous, and when you're buying $2-3 shares that should be worth $50 a share, that's a freaking bargain.
That's right.
But you know why?
Because they'll buy it back. They'll buy it back and pay even more than what it's worth.
And you know what?
Because they know it's going to go up.
Of course. But you know what? You know what, Mario? It's not like these .com companies or these Mickey Mouse companies that have $1,000 or $10,000 in assets. I'm talking about these guys have hundreds of millions, if not billions of dollars in assets and land and drilling rigs and offshore rigs. You know what I'm saying?
Yes, exactly. And it's just, and I said it to you before, and I told Steve the plumber, he didn't believe me, that we're going to see our government do something that we've never seen done before. Think about it, Mike. How else would you make this market keep going? There's got to be something they're thinking of or doing behind the scene, and they already did it in 2016 when they build out Home Capital Group.
Mm-hmm.
Now we're going to see where the government's going to do next in January. I think what's going to happen is there's going to be pension parties that are going to get together and they're going to start mortgaging out houses. That's what I see happening next.
That's huge. That's like treason against the workers.
Yeah, and that's what's going to happen, Mike. It's the only way it's going to work. I don't know anything else that's going to happen, because if you think about it, if everybody's going to be going, now the interest rates went up yesterday or this morning, went up another 25 points. It goes up to, what is it, 1.75, I think?
Yeah.
So an average of 300,000 is an extra $50 a month. So I said to my wife yesterday, I said, who has a $300,000 mortgage in the last 3 years?
Nobody. Everything's like $1 million. $1.1 million in average in Vancouver. $1.1 million, buddy. You're looking at an extra $6,000-7,000 a year.
Yeah. So they don't look at a year, Mike, like me and you. They look at a month. They look at a month, how much they're going to spend every month. So now they're spending 70 to 80% of their income to a house, to a mortgage, and the rest pays everything else. So if you're making $200,000 a year, God bless you, you could survive. But less than that, I don't know what they do. I don't understand how these people drive these brand new Mercedes, like you said, or Jaguars or whatever. I don't understand it. I just don't understand it. And that's, I blame the government. We bailed out these companies in the past. In 2009, we bailed out Chrysler, and then people say, well, Ford didn't get bailed out. Hold on a second. Let's go back. Ford was bailed out last year. Not bailed out. The government granted them $84 billion on engineers and hiring engineers. I don't know if it was 84 million, billion, I can't remember. But it was something like that. And this is money that taxpayers have given into. I don't know about you. If your store, God bless, I hope it never happened, but if your store closed, would you be able to get a bailout?
Of course not.
Okay. So, in other words, people that can't pay their mortgage is not going to get bailed out. If people would think, if they look at the numbers, that's the problem, Mike. Nobody looks at numbers. They look at words, but they don't look at the true fact of a number. So we bailed out Bombardier, I think it was 450 million, whatever it is. You divide that into the population of Canada, we'd all be millionaires.
Yeah, oh yeah, we'd all have. If the government took that and invested it into small businesses, and gave small businesses like a 50% grant, where here's 50% of the money, and you have to pay back only 50%. That would grow the private sector, business sector, and more people would be hired. You'd have if the government gave that to every small business, you would have a million jobs right there set up in the next quarter.
Well, just get ready. My next video is going to be a really good one. I'm just working on it now. I haven't done one in a while. I just wanted to get it all together for the information on this I just want to say hi to a good friend of ours that watches our show. His name's Jose Neto.
Mm-hmm.
He gave me some information about the Chrysler. He wanted me to do a video, but like I said, I'm like you. I got to do my research before I say anything to make sure I got my I's and T's crossed. The other thing, Mike, is a lot of people are still brainwashed and buying these condos up here and the houses. But I'm going to tell you, as an update up here, there's a guy that actually we've done business with before. He bought this house in 2015, moved in there, beautiful home, just around the corner from me. He got offered, he paid $685 at the time. He got offered $825 from a Chinese investor in 2017, last year in the summer. And what happened was this year, I guess he wanted to move, buy something bigger. His house has been on the market for 2 months.
Yeah. He should have sold when he could have.
That's right. So when Kevin Thompson and everybody else wants to talk, I sold my house, gentlemen. I sold my house at high times. I'm renting from the landlord, and actually the landlord wanted me to buy it back, and I said no. By the way, that's what happened, Mike, last week. He asked me if I wanted to buy it back. I said no.
Yeah.
I said no. I'm not paying for 24 for a townhouse. Sorry, man.
No, of course. Well, yeah, of course.
Yeah. So, I don't know what else to say, buddy. I just wanted to give you an update, get the show alive again, because like I said, if there's people that are listening and want to call in, please keep it PG, guys. This is like an underground for us to just vent out, bros.
Yeah, guys, keep it PG. I don't want to get this channel flagged for whatever. You know what I'm saying? I've already got a lot.
They tried to shut me down, Mike. Just so you know, 2 weeks ago.
Why?
They sent me. Yeah, YouTube sent me some because I put up a fake video, and they tried to shut me down, but they couldn't because I didn't use any improper language in that. They just froze me for the day. Then I was back up running because they thought I swore or something. But I don't know. Anyway, I wasn't upset. I got an email. They apologized actually, and they put my channel back up.
Yeah. Okay, brother. I really appreciate you taking the time to call us from your busy day and tell your wife hi. And we'll definitely.
You too, brother.
Yeah, we'll definitely.
Say hi to the kids, man.
I will, and we hope to see you soon. I might be heading to Toronto next summer to come and see you guys.
Oh, God bless you, buddy.
Okay.
Say hi.
Okay.
Tell Steve, hurry up and call in.
Okay, have a good night.
You too, brother.
Bye. Ciao. So that was Mario DeSetti's there, and calling in from Barrie, Ontario, and giving us a little heads up on what's going on with the amount of fraud that's happening. And yeah, I always get those close calls on my channel where I'm bullying or harassing. You know, I'm doing this new series where I'm trying to call out who these people are that are messaging my wife, messaging customers, and and I'm calling these people out, and I want to know who these people are and why they keep messaging me on social media. So I'm using social media to fight back, to find out who is Alfred, who is Diane Bronson, who are all these people, you know what I'm saying? And Murray Gilroy, who are these people and what do they want from me, you know? And what do they want from my wife and my business, you know what I'm saying? So, Kevin Thompson in the comments, you know? But social media is a good tool if you use it right, you know? Ever since I put up these, calling out who these people are, I've never had a problem on social media since. No more messages to my wife, no more messages to customers, no more messages, you know? I'm not getting this problem anymore, you know what I'm saying? Terenzio is in the comments, interest rates are rising, they are the same way they were. Yeah, I covered that at the beginning of the show when we covered Canada. And same thing with Sydney. Prices are going back to 2000. What was it? I think it was 2012. I can remember. But Sydney, same thing with New Zealand. Prices are slowly gearing back. London is a lost cause right now. England is just yeah. They keep blaming everything on Brexit when Brexit has zero to no leverage on the housing market when it comes to buying and selling and people's wallets. You know what I'm saying? Peter is saying Charles Bronson's wife. I don't know. It's Diane Bronson from Montreal. Keeps messaging me and messaging my wife, harassing us. trashing us. And so I'm using social media back to find out what is happening in this small town. Why is this happening to me for opening a business? Someone says, LOL, I know some who paid $6,000 for fake documents so they could buy their $750,000 home. And then Mike Hecker in the comment section saying, I've seen that too. Pretty crazy. So yeah, we're just trying to figure out what's happening. I got Steve. Steve is gonna call. Who is Alfred? So I'm going over screenshots that I've collected over the last couple of over the last 2 years with all this garbage here and messaging customers and stuff. We're just trying to find out who are these people and what do they want from me? Like, what do these people want from me? Why are they doing this to me? You know what I'm saying? Then I did another one here. Quite a few of them. They all link together. So guys, watch this video here. Oops. I'll go to it right now. If you want to watch this video, then we could find out and actually expose who these people are and what they want from me. You know what I'm saying? So I'll leave a link below here to this one. If you guys want to watch it on the side, you guys could watch that one. And then you guys could tell me what you think is happening. And I link it to the other video and then to the other video. So they all link together of all the different personas that are harassing me here in Merritt. So from my sources, the avatar photos, the photos that were used to make the accounts, were actually all downloaded here in Merritt, in the city of Merritt here. So we're trying to figure out now what's happening now. We're trying to go forward and find out who is doing this and why this is continuously happening to me and my family. So the Stephen Williams in the comments section here. So let me know what you guys think. Where things are headed. You know, I'd like to know your opinions on everything. That's why everybody has a chance to be on this show. Everybody has a chance to be heard. Everybody has a chance to... let's get Buddy from New Zealand really quick on here before... If Steve calls. If he calls, then oh well. But let's see our buddy here from New Zealand. If it's still early in Toronto, so he wants to be on the show. He could give us a little bit of insight. Because New Zealand is another English-speaking country that has been pretty much taken over. And see if there's a... No dice. Oh, my connection's down. I like it when the Wi-Fi box is 3 feet away from me. And I get no... I like it when the Wi-Fi is 2 feet away from me and it doesn't want to work. Yeah, baby! Okay, we're connected here, finally. Oh, I just sold something else on eBay. Such a lucrative market working from home. And if Trump passes that bill... Hello.
Hey, how's it going?
Good, good. This is Adrian from New Zealand.
Yeah, nice to meet you, Mike.
Where are you from? Where are you from in New Zealand?
Auckland.
Oh, okay, so you're from one of the big cities then?
Yeah, originally I was from Rotorua. We've pretty much been all over New Zealand. My family like to move a lot on the North Island anyway.
Okay. Don't blame me. It's a nice country to tour around and enjoy and take it all in, right?
Yeah.
So, what's going on, buddy? What's going on there in the housing sector?
I've been watching your show for quite a while, and also I've been keeping an eye on what's happening internationally. But I work in appliances and repairs and things like that. So we're servicemen, so we meet and deal with real estate all the time, and also we know what's going on with the properties because we'll be seeing if somebody's selling or talking to the customers that own the property and they want to spruce it up or whatever. but lately the work's dropped off for a lot of people that do servicing. But also people are still buying houses, and they have commercials on the radio and people going on the radio that are saying it's the perfect time to buy. The interest rates are really low. Houses have dropped a tiny bit, and because it's property, it's going to be, it's going to be an investment, and property doesn't go down in price, sort of thing. But
That's you know, if they're going to be telling you this, I think they should start putting this in writing and get them to sign a form that every time it goes down, you get a buyback where they pay you back the money you lose.
Yeah. No, it's I mean, New Zealand's changed a lot in the last ever since I was a kid to now. We've gone through a lot of changes, and I mean, we lost our because we used to make a lot of stuff in New Zealand for New Zealand's consumption, like stoves and appliances and things like that. And being a serviceman, I've seen all the new stuff come through, and I've also dealt with the older stuff. And the older stuff that was made in New Zealand was made to last 30, 40, 50 years. Now you're getting stuff that's coming through, and we import it. It gets made in Aussie or assembled in Aussie. It's not made in Aussie, it's just assembled there. And then we're getting stuff coming through China. But the stuff that we get now is people think it's normal for an appliance to last 2 or 3 years instead of lasting 20 or 30. And everything is made with such poor materials. I think they've been hiding, the dollar's dropped because everything's going up because I think the dollar's lost its value.
Right.
Everywhere, because they pumped it up so hard, it can't be worth anything, So they've been hiding inflation in things like stoves and cars and all the rest of it. They look like a really good vehicle. They look like a really nice stove. But even the top of the range ones, you're still paying the same price, but it's got hardly anything in it. It's missing half the value. All the bits and pieces that put together are rubbish. And then they make it so it's not serviceable on purpose, So you can't get in there.
So we're living
these things.
We're living in a throwaway society, is what it is.
Yeah, but I think that goes against everything I sort of stand for. Because I don't believe in draining resources out of the ground, wasting them, having a party before our kids get to enjoy any of the benefits of these resources, which we should be saving for them.
That's right.
We're just living so far out of our means and wasting time and effort and on rubbish that's not going to last more than 2 or 3 years. But people think it's normal. It's so backwards.
I brought up a video not a couple of weeks ago where I was saying I would rather pay an extra $3,000 for a washer and dryer and have it last for the rest of my life. And then I was talking about how I would like to pay an extra for wood for my house or drywall. I'd gladly pay the extra incentive, just to have the better drywall so I don't have upper respiratory breathing problems in 10 years. There's a lot of things I'd pay more for that I don't have to, which I won't, like I'd pay a lot more for a bicycle if I didn't have to replace it, every season, you know what I'm saying? So
yeah, I think most of the bikes are made out of one factory now in China. It's pretty much like most of the appliances we get in New Zealand. A lot of them, the cheaper market, they all got different brands on them, but there's only 2 companies pretty much that send us this Chinese rubbish. And it's Hire and it's Media. They're the two brands. But Media will brand itself different names, and so we'll hire a company, will go to them and say, I want, 10,000 of these, and they go, sweet, we'll put your name on it for that price, and it'll be one of your models. But it's not their fault for working hard and taking the work that we were too lazy to do. It's not the people of the country that gave up the work. It's the companies, because we opened up New Zealand back in the early 90s, to the global markets, and ever since then it just started, we started getting crap. Things changed from hard materials like steel to plastic.
Yeah,
And in certain areas they were made to break. I mean, we got regulators that control elements for stoves on top of the stoves. The ones that were made in New Zealand about 20 or 30 years, still ticking along. But you buy a brand new genuine part, it's only going to last you 2 or 3 years before it burns out because it's made to be a piece of rubbish. Everything they put in it, it's done on purpose. It's not like they're doing it for cost, because they can do it at cost to make something decent. There's only a couple of places things fail over and over again. And it's on purpose. It's just to keep us consuming, and it's just, it's so far ridiculous.
So, yeah, I saw your Facebook page. That's really cool, and all the appliances you have there. I think I even wrote you a 5-star review there. And yeah,
that's always good.
Yeah. So the housing. So it's really sad to see that the material. So what's the deal with the black mold? Is it a myth or is it real?
Just depends. I mean, because housing, there's been so much money in housing lately, they've sort of put less resources into the place, and they've sold it for a good price. Because if you're a property,
hold on.
A block and then put a whole lot of houses in there,
you're
going to get all materials for a good budget, and the people that supply it to you, they want to get it for a budget, so they all want to make as much money as they can to put you into a house that's going to sort of hold up, just so they can go for a trip to Bali or get themselves a car or put their kids through graduation, and that's why the materials in the houses are just like houses that were made in New Zealand. They might have been a bit colder because we didn't have the materials, but they still lasted 100 years. I mean, you're getting houses in these new developments, like up the road, they're building 7,000 houses.
Mm-hmm.
And I mean, materials they're putting into the place, like before they sell them, they're leaking. And that's $1 million house, a little tiny square house, it's $1 million, and it's already leaking. It's rubbish.
Why don't you trespass on some of those pre-builts and do some videos for us?
Oh no, I've got no time for that. I pretty much work 7 days because I've taken on my family's mortgage, because my father had a bit of trouble in business, so I've taken on the mortgage for the family. So I'm pretty much keeping a business going and keeping all the family together.
That's very strong of you. That's very good of you. That's very noble, and that's very manly of you.
No, that's what we do for our families, isn't it?
That's correct, sir, and that's what I've been doing for my family since the day I met my wife.
Yeah, that's why I like your channel. You seem like a real decent bloke.
Yeah, you know what? I do what I can. I work hard, and I don't how do you say, wish bad on anyone. I'm never jealous of anyone that does well in life. I'm always proud and happy for people, and to see them do well in life. It's I'm happy to see others do well and achieve in life, and other people don't like seeing that, and it's a problem for some people seeing others do well.
It's drummed into us. I mean, it's all in this world. It's all about segregating everybody, putting fences up, cutting out the community, slice it out like a cancer, and just keep everyone separate, keep everyone trying to outdo everybody. Just get bullshit goods in your house and set them a picture of having their own lovely house, a beautiful garden, trophy wife and all that crap, but it's so far from where we should really be. It's an absolute joke, and it's really so I don't know how long this whole charade's going to keep going, because I mean, we're just seeing the materials break down, we're seeing the morals and society breaking down, we're seeing the appliances and everything they make is just made to break. And I mean, it's just gotten to that point where when I buy spare parts to actually fix something, even they're crap now, and you're getting them from genuine places, and even the spare parts are shit. They don't even, well, excuse the French, they don't even match up.
Oh, you don't have to match up. You have to start bending and twisting and grinding things to make them fit.
Yeah, because even the people that bring in the spare parts are trying to get it from a cheaper place in China. So they just keep this perpetual system going of cheaper, just so they can grab a little bit. It's just so bad for our society to have everybody trying to outdo each other all the time.
One thing, Adrian, that I actually noticed too in clothing is, remember when the jean material used to last like 100 years, and then now you buy jeans, they last the season?
Yeah.
I remember jeans lasting, and coveralls, those coverall jeans, and those jean material used to be real good material back in the day. Now it's all coming from, I think it's coming from Taiwan or China or somewhere. I don't know where it's coming from, but now jean material is horrible. It stretches, it doesn't stay together, it tatters, it falls apart. You know what I'm saying? I'm seeing it from.
It's probably. Yeah, they're probably, it's not that they're just poorly made, it's just that they want them to break down quicker. So the material they're using, especially crappy, so it can rip quicker, so you can go and buy another pair quicker.
Yeah, but it's a lot of the stuff is I see is made out of a lot of shredded Chinese newspaper and rotten apple cores. That's what it looks like to me.
Yeah. I know, but that's the commands have been coming from from the wealthy nations for them to make it under license. I mean, and I mean, if a company wants something to last, then they're not going to be able to get that trip to Hawaii and all the rest of it, and they won't be able to. I don't know. It's just the way they've set it up to keep everyone consuming it. They've got to make it break down and rot and look like crappy apple cores. And it's just crazy. Even I mean, our lines are failing. Everything's sort of breaking down around us, but everyone thinks it's a good thing to go and buy houses at the moment. I mean, I've got family members that because of this boom, and I reckon we're at the top and we're counting down. I can feel there's some weird stuff going on at the moment. It just doesn't feel right out there in the public at the moment.
Mm-hmm.
I mean, it's just sort of quieting down. Everything's quieting down a bit. But there's cranes everywhere. The the skyline's full of cranes. We've got, we've got everybody sort of going and working, and I mean, all these houses are popping up where it wasn't like that a few years ago. But we're sort of at that area where it's all sort of popping up and getting ready for people to come and get their houses in a year or so.
Mm-hmm.
But I've got family members that have, gone and taken equity out of their house, gone and brought a house down south, and then they gone and brought another house down south with that equity, and then they gone up north and brought another one. And I just said, don't do this, and I explained to them, and then, they get all upset, and you don't want to ruin their buzz, because they're on it. And so you leave them to it, It's just like, because there's no point in getting in between that. You just say, no, you're doing the right thing. You've got to learn something here.
Wow. Well, yeah, wow. So that's pretty interesting. That's yeah. And, people using the equity as ATM machines and buying fancy cars and buying other properties and leaning on that property on another property and expecting the rentals or the rent to cover your nut. And then you end up getting your place smashed up and destroyed. And then they don't pay the rent for 6-7 months and you're hooped.
Yeah, well, they don't. Most people don't do that. I mean, you've got to have a look at who's coming into your house too. You can tell if somebody's completely off the planet. It's pretty easy to. I mean, keep your finger on the pulse if it's your house.
Yeah.
But it's just at the moment we haven't even upped our interest rates. We're not going to do that this year. That's what we said. So everything's been the same as it has been for a long time. And everybody's saying that we're in a booming economy and everything's sort of going forward. And, well, that's what I'm hearing from people around me, and it's frustrating because you can't talk to people about things like this because they get upset and go quiet, and it ends up a depressing conversation. So I keep my thoughts to myself and just observe what's going on,
You know how I get people off my back when they try and tell me stuff like this?
What's that?
I usually tell them, I love Donald Trump, and they just stop talking to me and walk away.
Yeah, I think so. I mean, I reckon whoever's in front of us, whoever's being portrayed in front of us is there because, they're brought and paid for. Mm-hmm. It doesn't matter what you see. There's no such thing as free media except for something like this where I can ring you up and talk to you, and
mm-hmm.
and we're just striking up a conversation with our thoughts and ideas. But if it's something on the TV, I think New Zealand's got one of the most owned medias now, which it didn't used to be like that.
Mm-hmm.
Whatever you hear or see, or it's all manipulation, and they're all trying to sway people's ideas and push them a certain way. It's just so easy to see. Yeah.
Mm-hmm. Yeah, no, I'm hearing you. That's what it is. I'll have you sometime, whenever you get some time on Mike in the Night on Saturday my time, which is Sunday afternoon your time. Well, if you have some time, we could talk about more in-depth stuff. You know what I'm saying?
No worries.
Yeah, if you ever want to.
It's been good to talk to you.
Yeah, well, no,
I better get this call, and I'll talk to you some other time.
Okay, thank you, brother. Thank you so much. Have a good day.
You too. See you, Mike.
Bye. So that's my man Adrian down in Auckland, New Zealand, who is calling, who basically called in. I really appreciate that. He's been waiting on the sidelines to come on the show and to kind of give his 2 cents worth, and it's good. Oh yeah, real good. There's my son Antonio. Yeah, he's going through tablet withdrawal syndrome, my son, so we got him off the... He's been too attached to the tablet lately, so we've had to get him off, So somebody's saying here... Gordon Smith says, haha, I love Donald Trump. Kevin Thompson is a lost cause. Everybody knows that, man. Everybody knows Kevin Thompson's a lost cause, man. So, I'm here with my son Antonio.
TV now.
Di ba pa school naman yan?
No.
He wants to watch TV late in the night. Yeah. Wasn't that?
No. TV.
Pergunta tua mãe. Vá perguntar a mami. Mami vai para a televisão. He's trying to tell me he's got no school. So, Field Marshal Brooke has messaged me. She wants me to be on her show, which is not a problem. She has a channel now, guys. Look up Field Marshal from New Zealand. She's covering a lot of the dairy farmers and a lot of the stuff that media is not covering there with the housing and the mold and all the crap that's happening. Wow. Yes. It's a cow? Yeah. Anyways, I don't know where Steve the plumber is. I think he got arrested again. I don't know if Steve the plumber got arrested or he's okay or where he's at. Oh, he's loading his truck. He's loading his truck. He'll call it in 5 minutes. Okay. Pergunta mami. Vá perguntar tua mãe. Vá. I'm liking how everyone's talking about Kevin Thompson here. Kevin Thompson, Steve is going to call next to tell us, just wait, guys. I'm seeing it all around. Next couple of months, guys. The Ozark. What's going on Zero Hedge? What's our friends up at Zero Hedge up to? Any media that the left doesn't want you to read, you always read that stuff. Because that's the stuff that makes you question. We got Zero Hedge here. What's going on here? Ozark. I wouldn't touch that crap, but they're lending on at twice the interest rate. What? Trouble in Arkansas. The cycle of Countrywide Financial just imploded. Oh yeah, Countrywide Financial. During every credit cycle, there is one national lender that all other lenders try to emulate. This is because a combination of rapid asset growth and elevation of interest margins leads up to rapid earnings growth and share price appreciation. Unfortunately, in order to do that, you have to make a lot of risky loans and pretend they're totally safe. Remember Countrywide Financial? They were the ones who lend you no matter what, no matter income, no matter job, no matter what assets, you're approved. Anything to show growth. Everyone in the financial industry emulated them because they were growing so fast. Besides, when you have a fixed cost structure, you cannot exactly stand still and let others steal your market share. That brings me on what may be the cycle's Countrywide Financial, Ozark, OZK USA, formerly known as Bank of Ozarks. I reached out to a friend in hard money lending for perspective. I wouldn't touch that crap they're lending on at twice the interest rate. Interesting. Wow, look at its stock. It's just plummeting. I filed this all the way in my head and forgot about the Bank of Ozark until my hard money lending friend sent me this article in July. Aggressive and immotivative. Lenders always blow up, especially when the rates increase. If I shorted stocks, this would be the top of my list. Wow. Look at this short here. Wow, that's huge. Look at that drop. That's a huge short. On Friday, we learned that the implosion is already beginning. Two sizable legacy loans from 2007 and 2008 were just written down by 69%. Sorry, guys, I have to close my door there. My wife's putting Antonio to sleep. Let me see what time. Yeah, it's his bedtime. He's tired. He didn't nap today, so. While U.S. banks are in bigger financial shape, where was I? Two sizable legacy loans from 2007 and 2008 were just written down by 69%. This isn't a small markdown either. They should have been marked down years ago. Not good. Oh. Stevie, what's up, buddy?
How's it going?
It's going good. How are you? Everything okay?
Doing all right. Doing all right.
I'm just reading I'm covering the article here about Zero Hedge article that was put up today about Ozark, these guys here, Ozarks, the guys that lent money to anyone and anybody. Their stock's plummeting here.
Yeah, I heard something like that today. I didn't follow up on it, but I'll definitely have to read that Zero Hedge article.
Yeah, it's really powerful. It's strong. It gets to the point real quick in a heartbeat. You know how Zero Hedge is. They just tell you straight up.
Yeah, I quite like it, that's for sure.
Yeah. So, okay, tell me, what's going on what do you got to tell us? Is there anything on the down low you could tell us?
Well, according to Kevin Thompson, I have no clue. I say the same things week after week, month after month. Whatever he had said. But, I mean, hey, he's entitled to his opinion. But Gordon Smith seems to say that he's irrelevant in the lost cause, and I'm starting to follow suit with that statement.
Okay, so what's going on now that you've brushed off your some negative feelings that you have? Now tell us what's going on. Give us some something to chew on.
Well, okay, interest rates went up today.
Right.
As we all know, the Bank of Canada raised 25 basis points, and we're very direct and transparent and forthcoming to the effect that the Financial Post basically put out an article about 2 hours after the broadcast was done at their meeting, saying that, they had raised rates 25 basis points and more rates to come. That just basically solidifies everything we've been talking about for quite some time. Affordability is going to continue to erode the ability to qualify for a mortgage, and other loans as well are going to come to a screeching halt shortly for many, 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 many people. It's close to, I think it's 30% or 1/3 of all Canadians really are fearing bankruptcy due to the interest rate hikes.
Yeah, I read that article at the beginning of the show when I kicked off. We covered Canada, and that's like 1 in 3 people are pretty much on the chopping block for this. And what do you think? I mean, what do you think? I mean, the banks are turning away potential deals because they're afraid to reinvest in some of these refinances. Where do people go when they can't refinance?
Well, they're going into a very, very gray market, and they're going to the underground levels of lending. They're bypassing the B lenders, going straight to the C lenders and the sharks, which is not a good thing whatsoever. They're better off actually renting when you factor in the amount of money that they're spending on interest every year. It just doesn't make any sense. When you're paying, 8 to 12% for a mortgage, those numbers are there, and those, percentages are there for the purposes of construction loans, not first charge mortgages. That's what kills me, and people are still doing it. And there's a number of situations where it's now a trend where you have people over the age of 50, 55, 60 years old. They bought their house, for anywhere between, call it 10, 15 cents on the dollar, upwards of 35 cents on the dollar. And they're selling them for upwards okay, Mr. Smith, you can't afford to qualify for the mortgage. I'm going to give you a vendor take-back mortgage, and I'm going to increase the cost of the property underneath the agreement of purchase and sale. So subsequently, the interest is, I already have my interest money. And I'm going to do it for 1 year, 2 years, 3 years, whatever it may be. And as long as the seller is selling his principal residence, he can use that additional $150K, $200,000 added to the purchase price. And it's basically tax-free because he's getting away with it underneath his personal residency exemption.
Right. So
this is happening right, left, and center, and this has actually been confirmed by one or more people that I know within the financial sector.
So, what are you predicting for Q1 of 2019? We've already cleared the great Canadian and the great Australian and the great New Zealand blame game. That was I called that for this summer, and that's been, the whole media has been pointing the finger at who to blame. Now, what are we gonna call the Great Winter? The Great Canadian Winter of what?
I think if it's winter, I think it's going to be we're going to call it the Great White Recession.
That's a good one. That's a good one. But it may not be politically correct on some channels, but it's fine on the Mike Martin's channel. Continue.
No, in terms of white meaning snow, not
I understand,
not color
Steven.
of one's skin.
I understand that, Steve. But there's a lot of people out there that might misinterpret that and want to shut down the channel.
Yeah, but Mike, we're right wing, right? So I mean, it's one of those. We're labeled as racist. We don't even have to say anything.
Yes, Steve's on the money with everything. So now, see the Great White Christmas, the Great White Defaults. We'll call it the Great Winter Default.
Sure.
The Great Winter Default.
I think by the end of Q1, we will have seen not another interest rate hike, but 2 rate interest hikes, 25 basis points at a time, for a total of 50 basis points by the end of Q1.
You see how after we raised interest rates, our loonie went up just slightly because of that? If we don't raise rates, it's going to be really tough. It's going to be really, really, really tough to keep up with the Americans. Australia is never going to raise rates, and neither is New Zealand. So they're going to be I would like to. Well, Australia's falling like a falling knife. So Australia's falling like Niagara Falls. I'm talking about people can't secure the financing anymore. So they can't get the money to buy, and if you can't buy, it sits on the market. But I see Australia falling apart with the second or third article I read about Australia. They're falling apart, Steve, without even raising interest rates. They're falling apart. Why? Because there's just no liquidity, and banks are not lending anymore, and that's closing the deal for Australia. So even if Australia raises rates, yeah, there's going to be a lot of heartaches, but people jumping from interest only back to paying down the damn thing, it's a heartache for a lot of people living down under. I really feel for them because a lot of them bought into this Ponzi scheme. So Steve, I need to ask you, where are these people that told you that they've been preaching to us for the last 5 years that we're completely bought out of the market for the rest of our lives, and if you don't buy now, you could be completely bought out for the rest of your life? Where are these people?
They all live in Kevin Thompson's condo building.
I heard a lot of real estate channels are starting to change their tune a bit to, now is a good time to buy type of thing, instead of saying if you don't buy now, you'll never own. So there's a lot of changes. You know what I mean, Steve, right? So...
Yeah, I think what's really going to do a lot of people in, and that Better Dwelling article that I believe you covered at the top of the show, at the beginning of the show, really truly sums up what people are doing. And people are bleeding, and they don't even realize it. It's become a fact of life, or a way of life, to take the equity out of their house and virtually go and spend. And God forbid if they're doing that just to survive, sooner or later they're going to have to pay the piper. And you know, the days of selling your house and then, you know, paying off your home equity line of credit, those days are gone. And they'll continue to be gone because house prices, I don't care what anybody says. You look at the numbers, you look at historic numbers, you look at facts on findings. As interest rates rise, house prices have to come down.
Oh, there's no way about it. We did this countless times on my channel where we took a house that was on MLS, a $700,000 townhome, and we took that the townhome, we put it into a calculator with I think it was at CIBC or RBC, I can't remember which one, and we used the existing interest rate that they had available and the tools that they had available on the website, and we try fitting it in. The average person needs to make $185,000 a year to buy a $700,000 townhome.
Yeah. It's absolutely crazy. And it's funny, you know, Kevin Thompson in the comment section just says, you know, equity is your money. Well, equity is your money to a certain degree, but your house is only worth what it's worth when you go to sell it. So if your house went up 35% in 1 to 2 years, and it was based on, you know, ethereal gains and irrational exuberance, what is your house really going to be worth, you know, by the time you get a chance to pay back that heat lock or pay down that heat lock? You really have to ask yourself where house prices are going in the next, you know, 1 to 5 years, 1 to 2 years.
But Steve, he's acting like you're not even paying any juice or any vig on the HELOC. You're paying so much juice on that HELOC.
You absolutely are. And you know what? And it just went up. And it's going to continue to go up every time that interest rates go up. It's an open loan. It's not fixed. There's no fixed rate on heat locks or lines of credit.
Yeah, because a lot of those lines, a lot of those HELOCs are prime plus 2.
Well, yeah. I mean, whatever the rate is, the rate is. And, I mean, can you believe some people in the past 1 to 2 years were leveraging their house by way of home equity line of credit and lending it out to people for a second mortgage on properties?
Oh, that's got to be an absolute nightmare to collect. Oh,
Mike, their position is number 2.
Yeah. Unless you got someone like Rocky Balboa that could go collect for you or something. I don't know how you could get that to work. Because how you start collecting from these loans, these private loans that people are lending out when people default?
Well, that's it. And the default ratio, I mean, I'm searching everywhere for it. And the banks, they have an estimated default ratio by the end of the year, and then they've broken it up into quarterly. And I'm waiting till tomorrow night when I meet up with these guys, and they will have that ratio in terms of their book of business based on mortgages and heat locks and whatnot. And I know for a fact it's not going to be very good. That number is available, and large banks, at least in Canada, that is, the 5 big banks are really working to figure out what their exposure is.
Oh, well, no. Well, you get a really good auditor in there to look at the books. He'll start finding everything wrong with every deal that's on those books. They'll find a lot of stuff. Wait, this pay stub doesn't match his job on file. Why is this phone number out of service? What's going on? Why is this not a government issue ID on this file? Why is this TDS out of whack? Who approved this? Why did this get approved? Man, they're going to find stuff left, right, and center, up and down, and left and right, underground, all around, up in the sky. That's wrong with a lot of these deals. Once they get auditors in to look at some of these books, once they get financial examiners in to look at what went wrong, and it's all common sense, and it all breaks down to common sense and poor lending practices, and that's it. And people making commissions, and that's what people were writing off their commissions.
Yeah, Yeah, and I understand where you're coming from there, and I think I don't even know that they have to go as far as auditing the book. They can just look at it as strategized sampling. I won't get into what strategized sampling is, but let's just say strategized sampling is not necessarily at a glance or 20,000 feet. It's more in depth, but they're not going through it with a fine-tooth comb. They can figure out how many loans they're anticipating that will default. And every time an interest rate hike goes up, they have to do this. They have to do this because, of their bank stock.
I'm talking about, I know what you're saying. You're talking about the big picture. I'm talking about if I walked into one of the offices and I started going through the files, the mortgage files, and I would see so much discrepancies in every file. It'd be like scratching my head, like, why is this credit bureau 2 years old? Why is this? Where is this? I'll find all kinds of stuff wrong with those files, and you start seeing them, and you start seeing these people default left, right, and center.
Right, and I think we have to look at the overall picture when, I know for people that don't know what OSFI is, it's our financial watchdog in Canada. And they told us something in not so many words the other day, where what they're trying to do is they're trying to remove the ability for lenders just to say, okay, Mike Martins, you know what, you got 50-60% down, 50-60% skin in the game. We don't really need to phone your employer. We see your deposits, we see this. We'll pull your credit and do this and do that, but you got enough equity in your house. House prices aren't going to come down 50-60% from where they are today, and you're not going to walk away from that. Now, that's basically what's going to happen is that's all going to change. Every single loan is going to be looked at as if you had 20% down.
Okay. Let me open.
Now, Mike, have you been on to Rate Hub as of lately?
The Rate Hub?
Yeah, Rate Hub. RateHub.ca.
I'm going on it right now. Going to it right now. Search smarter, save money. So it's going to my location at Merritt, BC. There's the best 5-year fix, 3.33%. Scotiabank, 3.79%, 3.69%. It's going over all the different rates right now. Go to people, if you want to check it out yourselves, go to ratehub.ca to see what exactly is going on when it comes to shopping for a better mortgage or a better interest rate,
Okay, so Mike, I want you to look on there, and I want you to look at for insured mortgages.
Okay.
There is, I was on there the other day, and I'm hoping to God you can see it. I should have taken a screenshot of it, but I'm sure it's on there. If you have an insured mortgage, the bank is, in other words, if you default, the bank's going to get paid out as the first lender. There are more than one bank is actually offering better rates than as if you had a conventional mortgage with 20% down or more. What the heck does that tell us?
It means they're only lending to people that have more than what the average person has saved.
Okay, I never looked at it that way. Basically, what that tells me is they're going to give you a better rate on your mortgage, okay, because you only have 15% down or less than 20% down, and you have insurance in the event that you poop the bed and you walk. In other words, their loan is secured and will get paid out.
Oh, I see. I missed the question that you asked. I understand what you're asking me now. Okay, yeah. Yeah, well, of course, yeah, because it's like what you're telling me is like you are a sports bookie, and when you win, you go collect your debts, and when you lose, you tell the people to F off. So you win-win. So it's a win-win situation for the bank.
Right, and I guess using your metaphor, if you will, the guy that's, the bookie that has to go and collect from, the people that lost, and they don't have any money. In that situation, Cousin Vinny now becomes, is the collector. In this situation, CMHC or Genworth is now Cousin Vinny.
Right. I see what you're saying. All right, let's get a calculator here. Oh Christ! They're trying to solicit me for a credit card, Steve. $300 a year. $300 a year, and you get more flying points. But then, if you do the math in 5 years, that's enough to buy 3 tickets to go around the world.
That's very true.
Yeah. So let's see what's happening here. So Steve, people need to understand Steve, what's going to happen with the renewals? A lot of renewals coming up now. A lot of
renewals are coming up now.
Q1, Q2, and Q3, you're going to see huge renewals coming up because the term is coming up, and then they're on a 30-year or a 40-year amortization, whatever they're on a 3-4 year term. What is going to happen when people can't renew or they don't qualify?
Well, that's a very interesting situation. A lot of people are going to have to sell their house because they're effectively going to be told they're living well beyond their means and their financial capacity, and the bank will go ahead and they may give them a renewal, definitely not at a decent rate that they once were getting, but they're probably only going to do a 6-month term to allow them to sell the property.
So, Peter's saying, this is still cheap. My variable rate is 4.22%. Yeah, but Peter, you're not borrowing $1.2 million, dude.
Well, exactly. Peter, what's your combined household income, and what's the average price for a detached house?
Mm-hmm. Because if we know that, right, then, like, is he free and clear? What's his disposable income? You know what I'm saying?
Yeah.
That all adds up, right?
No. Hang on a second. Your variable rate is 4.2. That's fine. But has anybody checked what the 5-year fixed posted rate is?
Yeah, I just saw it. It was high. It was like 3.6 or 5%, depending on which.
It's 5.34.
Yeah. Okay. So the bank's lending at 5.34, but that's provided you have spot on credit, a big down payment, and you fit in the the stress test, and everything falls into place. All the stars align. Now, if the stars don't align, you could be paying 6-7 points on your mortgage.
Well, I mean, that's when you're getting into B lenders. But yeah, they'll go ahead and they'll qualify you at in terms of the stress testing. They're going to qualify you at the posted rate. So that posted rate is 5.34, and I believe it's probably going to go up shortly.
Mm-hmm.
And then basically take it there. It's basically the posted rate or 2% higher than what you're being offered.
Mm-hmm. So the benchmark.
Whichever.
I'm just putting in the benchmark median price in Vancouver. Let's say $1.1 million. And then let's say we do a fixed rate. Okay, they're still offering. Closed. We'll do a 5-year closed at 5.59, and an amortization of 25. Let's put 30 years to keep the payments low. Monthly frequency. Yes. No. Yes. Calculate my payments. So with the average benchmark price home in Vancouver at $1.12 million. Your monthly payment at 5.59% is $6,656 per month net.
Sorry, say that number again, Mike. You cut out.
Okay, the benchmark price right now in Vancouver is $1.12 million for the average detached in Vancouver. On a 5-year closed at 5.59% on a 30-year amortization with a monthly frequency. you're paying $6,656 per month.
And the total mortgage the total amount of mortgage is 1.2 million?
1.12.
1.12?
That's the benchmark price across the board.
Okay. So that's that. So yeah, does it give you any room for a down payment?
You know, I'm just putting down it's not giving me the average. So, let's say the person put down 200 large, and let's say we're going to borrow $1 million, okay?
Yeah.
Okay, so we're going to borrow $1 million. Okay, so that puts you down to $5,973.21 per month. And you're still going to have $924,000 owing after your 5-year term.
Sorry, how much owing?
$924,000.
$924,000?
So you pay down $79,000 after 5 years of payments.
5 years of payment. Okay.
That's very bad.
That's disgusting.
That's horribly bad.
And what are you paying? What's the total interest cost for the term?
$266,000.
$266,000. Wow.
Mm-hmm.
Wow. You're better off going to rent a $1 million house. Okay. And, like, what the heck? That's ridiculous. That's insane. That's absolutely incredible.
So I'm looking at a condo with my wife in Fort Lauderdale, where the area I used to live in, and they're asking $76,000 for it. And interest rate with Bank of America is about I would say it's about 3.94. Let's say around 4%, okay?
Yeah.
Okay, so to borrow it's $386 a month. And this is for a 3-bedroom condo, and in a gated community. And interest.
Keep in mind, Mike. You need 50% down, eh?
Oh, I'm just saying roughly what it's going to cost is $76,000.
Oh, pardon me.
Yeah, I just want to see what $76,000 would cost to borrow, right? 30 years monthly, total payments, interest paid. So you're still owing $70,000 after 5 years with borrowing the $76,000, but your payment's only $386 a month. So you're renting the money. But
right.
I'm looking at a 10-year term, okay? And now it makes more sense. You are paying $793 a month, and you're left with $49,000 to pay after the 4 years. On a 10-year term, yeah. So if I do 10 years, and let's say I put down $30,000, and I mortgage, let's say $36,000. Okay, my payments are $375 a month for 10 years, and I could have it paid off in 10 years at $375 a month. But that's the problem. People are not buying properties for $76,000. They're buying properties. What's the benchmark for a 1-bedroom right now in Toronto? Is it still $680?
No, I think it's come down a little bit.
$645?
No, it's 5 something.
Okay, so let's say $550.
Yeah, I think it's 580 or something like that. I could be wrong. I don't really follow the condo market as well as I should.
Okay,
they're way overpriced. Value isn't there.
Let's just say you want to pay it off in 10 years. You got to pay $6,149 a month for 10 years.
Wow.
Yeah, for 10 years. And if
Mike, the writing is on the wall, my friend.
So 30 years, you're paying $3,305 a month right now with the new rates for a 1-bedroom.
That's crazy. That's absolutely insane.
Yeah. So
people are willing to do it, but make no mistake, there's a lot of millennials leaving the city of Toronto.
Oh, big time! There's a huge mass exodus. I don't know. This new, even after Faith Goldie lost the election, a lot of people now are packing up and leaving Toronto in droves now. I've been talking to people saying, "Oh, I'm leaving Toronto now. I gave up." You know what I'm saying?
Right.
So a lot of people giving up on Toronto. You know.
Well, they have to. They have no choice because they look at the cost of living and they look at their office desk jockey job or whatever they do, and it just doesn't add up. And that's actually pushing property values up a bit in the outskirts of the GTA. Kitchener, Waterloo,
Cambridge,
Hamilton,
Ontario. Yeah.
St. Catharines is starting to get up there. Grimsby is getting up there as well. But in terms of the commuter towns, like, Richmond Hill, Newmarket, Aurora type of thing, they're coming down in value. As much as Richmond Hill is still more expensive in terms of average wage than Toronto.
Oh yeah, I see what you're saying. Yeah, you know what? It is affecting, like right now, like I've been covering parts of Australia where a lot of people left to a cheap part of Australia called Hobart. And Hobart is in Tasmania Island, where it used to be a former prison, right? And it used to be a penal colony. And houses there were in and around 130,000, 160,000. Now houses there are 300,000. Because everybody left the big city of Sydney and moved down to Hobart because they wanted to live and buy a house and raise a family.
Yeah,
and that's
absolutely.
And that's what's been happening. A lot of cities, like Merritt's feeling the pinch now. Now rents are going up in Merritt, and now housing's going up in Merritt because of people like me that came here and wanted to settle down and raise a family.
Yeah, I agree, but there's going to be a leveling off, Mike, because house prices, as much as they're experiencing, an irrational exuberance, if you will, and house prices are going up based on the demand for affordable housing. As interest rates continue to climb, house prices have to, really stay at a certain level in order to make sense and in order for people to qualify. Just because, Cambridge or Waterloo is cheaper than Toronto or Merritt is cheaper than Vancouver doesn't mean it's going to come anywhere close to being that price point, because it can't.
Right. I think if there's a correction in Merritt, I think it's going to go down 10-15% that it's gone up. And if it goes lower, oh well. But I don't...
That D-Day comes closer and closer, and it's going to come harder and faster. And if people aren't careful, we may not just see a correction. We may see a full-on crash here. And I don't wish for a full-on crash, because that would be catastrophic to the economy. Do we need a housing correction of 20 or 30%? Yes, I absolutely agree. And I'm not talking from the peak. I'm talking from today's prices. But do I want to see 89, 90, 91 all over again? Absolutely not. That would just be absolutely stupid.
No, but
that way.
Never mind that. What about 80, 81, 82 and interest rates went to like 17%?
Well, that's the whole thing. But this is the whole thing. Interest rates don't even need to go that high. Mike, since basically 2017, interest rates have gone up 1.25%. He's hiked 5 times. Bank of Canada has hiked 5 times. And they're going to continue to hike. Everyone is basically priced in an overnight lending rate of approximately 2.5%. Their target for 2019, by the end of 2019, is 3%. But economists, regardless if they know or they don't know, 2.5% as an overnight lending rate, that's another 75 basis points. That's only 3 more rate hikes.
And people's, on a 0.25%, people are looking at $7,000 to $8,000 a year in increases, depending on how much they've borrowed, right?
Yeah, basically now that the quarter, I think they did the rough estimate, a 0.25% increase the average person is paying about $240 more a month.
Mm-hmm. Mm-hmm. That's a shock to a lot of people.
Absolutely. A lot of people don't have any more than a couple $100 left over by the time they paid everything.
If that. Some people have $60.
Absolutely. I mean, I have no money.
Mm-hmm.
I'm just a poor plumber.
Yeah. No, I don't believe that. I don't believe that. Kevin Thompson does, though.
Absolutely, man. Like, I mean, I'm sitting here, rolling my own smokes here. I mean, at least he could have done is offered me a wheat cookie or something. I haven't eaten in 5 days.
No, 3 days. It's 3 days, not 5.
Well, depends on how you look at it. But I mean, the 24th. I mean, in just a few short days, I get my welfare check. Got to pay my rent.
Oh, I see. So that's Steve the plumber being very sarcastic here tonight. But you know what, Steve? We'll see what happens in the next quarter. It's going to be very interesting. I mean, we'll just go from there and just keep trending it out and see where it's heading. And everything we've been saying for the last, I don't know how many years now, is coming to fruition. And it, like I said, if people can't borrow, people can't borrow. When they can't borrow, they can't buy. When they can't buy, product doesn't move. When product doesn't move, product declines. Product declines, volatility goes down, liquidity disappears, and then people start running to the hills.
I absolutely agree with that statement, and it's very, very true what you just said. So, Mike, I have a question for you.
Uh-oh.
Where do you see us by the end of Q1 2019?
I see interest rates going up one more time. I see. We're going to start seeing a little bit of more fracturing. We're going to see a lot of the shadow lending mortgages and a lot of the Mickey Mouse mortgages and jumbo mortgages. I see all those people starting to default by then.
Okay.
I see those people going down. I see those going down first, and by summer, you start to see the doctors and the lawyers and the plastic surgeons and the city people, more of those government type jobs starting to default right after.
Okay.
And then and by winter of next year will be the high-end housing market, because they're not selling, and they're going to drop anywhere from 20 to 30 basis points, and the high-end market is just going to flop because nobody wants to buy those high-end houses. And then at the end, those ones fall, and people are just walking away from mortgages by the end of by Christmas next year.
Okay. I see. Yeah, I mean, I see that starting to happen already. The house up for sale, down the street from me is the same house as mine, and it started off at very, very close, or just shy of $3.5 million at the height of the market, and things were selling for in and around that price. And he's now just reduced his property again, and Mike, he's at $2,460,000.
Wow, he's cut it big time.
Mike, we're talking about $1 million large. $1 million.
That's a lot of cake, buddy.
That is a lot. And he did it today. It populated today, and my agent actually called me, and he had told me. And the best offer he got when he listed it at just shy of $2 million, the best offer he got was 1.78 or 1.79. Well under $1.8 million. And realistically, that's what that house is probably worth.
Yeah,
it's about $1.8 million.
Yeah, realistically, like in real numbers, right? So let's see, keep an eye on it for us and let us know where it's headed. It'd be nice to know, to forecast,
Absolutely, I agree. And I just want to go ahead and, not so much plug it, Mike, but House Sigma is great. It's fantastic. I recommend everybody go on there, create an account, and the information is overwhelming. It is a wealth of information. Hopefully, you know, you didn't buy a flip or at the height of the market because you might become a little suicidal. But at the end of the day, it gives a really good, strong picture of where the market's at. It'll tell you whether you're in a buyer's market, a seller's market, a balanced market, and it'll give you other sales within the area.
Mm-hmm.
It'll show you the price reductions. It'll show you when it was, you know, bought, when it was listed, when it was suspended. It's a fantastic website.
Mm-hmm. Yeah, House Sigma. Yeah, I see it here. Yeah, it's a great website. Yeah, it won't let... Yeah, there it goes. There you go. Just sold. This one got reduced huge. Holy crap, this one reduced too. Huge reductions here. Yeah, homes.
It's crazy.
Yeah.
And Elizabeth DS says Mississauga people selling their homes, a lot of up for sale. Indeed, a lot of houses are up for sale in Mississauga, Oakville, all throughout the 905. Everybody's trying to sell their house.
Steve, why don't you make a mock YouTube channel, like what? Not the Steve the Plumber one. Make another one, and why don't you go ahead and upload some videos? You don't have to talk in it, and then we could play the video in the background while you're talking, and filming like drive-bys, just driving by certain areas with the signs and areas that are overvalued. You know, you're not doing anything illegal. You know what I'm saying?
No, I thought about doing that. You know, I'm very inspired by the Lost Canuck Mario there. He's done a lot of great things. I love it when he walks through new builds that are, you know, pre-construction. I listened to his call today, and he really said some decent things. You know, he says I didn't believe him about, you know, the government, you know, intervening, you know, doing an intervention and, you know, bailing people out. I guess I don't really want to believe that, because if they bail people out, they're just going to, you know, it's going to prolong the inevitable. We need a reset. We absolutely do.
Yeah, we do. We do. Definitely. Okay, Steve, I'm going to sign off, buddy. It's going to be 3 hours I've been talking, and I'm tired, man. 3 hours talking is hard, man. But
I understand, buddy.
And I have to hit the bathroom. So, guys, House Sigma, check it out, guys. It's free, a free account. Get on there and see what your house is worth. And what was I going to say? Yeah, don't forget to join me, guys, for Mike in the Night on Saturday nights. And we'll be bringing up, I don't know, whatever people have on their minds. I'll bring up a few articles, and maybe people could discuss what's going on. And, yeah, hopefully we could get something going on Saturday night with Mike in the Night and get a few callers on and see what's going on in the world around us. Anyway, Steve, thanks for joining us on Trends in the Housing Market. Have a good night.
You as well. Thanks very much for having me on.
No problem,
Good
buddy.
to be with you.
Yes.
Bye-bye.
Bye. Anyways, guys, Saturday night, Mike in the Night. Let me know what your plans are. Let me know. Be with me Saturday night, Mike in the Night, 9 p.m. Western Seaboard time. That's midnight. Miami, New York, Toronto time, and God knows what time it is in the rest of the world. Tune in, guys. Have a good night. I am so tired. Elizabeth's asking, what's the site again? It's called House Sigma. It's up right here. House Sigma. There it is right there. House Sigma. Check it out, guys. You can even change the language, too, if you want. Have a good night, guys. And thanks so much for being here with us tonight, and I appreciate it. And Kevin Thompson, God bless Kevin Thompson. And thank you, guys.